Shajani, with me is Hiral Dadia and Neeraj Shah. Let's take a quick look as to how the markets are doing, off from its day's highest point for sure. The Sensex has in fact almost slipped 220 odd points. The Nifty also has seen quite significant downtick below the 25,400 mark now, about just 0.13 odd percent, just 33 points of gains is what we are seeing. So expiry playing its part when it comes to the benchmark indices. Let's try to pull up the Nifty heat map because that will tell us as to what counters are actually seeing profit booking today, and some auto names are most certainly seeing profit booking. Tata Motors is down by about 1 odd percent, Coal India down 1.7%, Bajaj Finance down by about 1.2%, ONGC, Ultratech, Indocent, Tata Consumer. So some banking names also seeing a tad bit of pressure, especially names like Indocent Bank. In terms of what is actually doing well in trade today, includes your names like HDFC Life up 2.5%, followed by something like an Eternal, which is up 1.7%, Sun Pharma, Infosys, Wipro. So IT names fairly doing well in trade today on the back of the US Fed rate cut. Let's try to pull up the sectoral heat map and see how sectors have fared throughout the day, and at this hour, what are they doing? Nifty Pharma up 1%, followed by Nifty Healthcare, Nifty IT in the green, but something like a Nifty Defense is seeing profit booking today. In terms of the downtick, it's down by about 0.6%. Nifty Media down 0.4%. PSU Banks has turned in red, down by about 0.3%. Nifty Auto also in the red, down by about 0.2 odd percent. Let's try to put up the advanced decline ratio and see how that chart is faring, because that will tell us as to how the broader end of spectrum is looking like, and it is narrowed quite a bit. In fact, there was a now the declines are overpowering the advances, so the bears are in fact more than the bulls right now in the market. We've got around 1,250 odd declines versus that of 1,000 odd advances, so slightly more than that 1:1 ratio. But that gives us a picture as to how the broader markets are doing here, because largely mid-cap 150 is flat, but the small cap has slipped into the red.
Absolutely, small caps have slipped into the red, and what's interesting is the trends that you're picking up in terms of your individual sectors as well. If you pull up the IT sector, that has started to see profit booking, and that's absolutely visible on the screens right now. From the day's highest levels, it's actually inched to the day's lows right now. Actually, Pharma has picked up because of news flow that's coming in with regards to Glenmark, Biocon, positive commentary coming in from a city for Sun Pharma as well, and the Pharma index is at the day's highest levels. Let's quickly look at the sectoral heat map, because that will tell you the other individual sectors which are actually drooling under pressure today. What is losing out is energy, media and defense, which is seeing profit booking. Let's quickly look at the broader markets, the mid cap and the small cap index right now, and individual stocks over there. Names like Prism Johnson, strong up move coming in on a Prism Johnson in trade. Poonawalla FinCorp as well on the back of promoter stake. That stock is up 12 to 13%. So strong moves there. In fact, Restaurant Brands is seeing some good moves. Tata Investment, Embassy Developers, Poly Medicure, HFCL and LIC Housing. Cohance trading under pressure, and this is on the back of the block deal that has happened. DCM Shriram, no major news flow, but yesterday that stock was up, today seeing profit booking as well. Varroc Engineering is another one that you should be looking at, and Motherson Sumi. In fact, we did speak to the management of Motherson Sumi as well today on the back of the GST rate cuts. Newgen and Zentech, both of these counters are also seeing some strong moves in today's day of trade. If you pull up both these charts, and you will see what's coming in on a Newgen Technologies as well as a Zentech. Newgen Software as well as a Zentech. Shalimar Paints is another one which is seeing some smart moves. Bajaj Consumer is another one which is also seeing some smart moves in today's session. Shalimar Paints at the day's highest levels. Bajaj Consumer, similar gains. But let's also get in Kush Bora, founder at kushbora.com. Kush, welcome to the show. Profit booking has started to come in terms of today's session after that good day of trade. What are you tracking in terms of levels on Nifty 50 as well as Bank Nifty, and what should that strategy be if someone has to trade there?
Sure. Hi, Hiral. Very good afternoon to you and to all the viewers. Well, 11 sessions out of 13, we've had gains on the Nifty. But despite that, there weren't really any signs of overheating, in the sense that if you see the RSI, even if you see the PCR, which went close to 1.25 odd levels, but there no real overheating. But for the last couple of sessions, we maintain that, buy on declines, buy on dips is a better strategy rather than chasing this momentum. And you're seeing, some of that play out today, where Nifty is off nearly about 200 points from the high point of the day. Bank Nifty also about 400 points, 350, 400 points from the high point of the day. I think this is perhaps going to play out a little more. I think this is a good sign a buy on declines is still a better strategy. And also to understand that the PCR is actually gone from 1.25 to about 1.05. Now, while that may be a very healthy sign, if you actually break down the data and look at the internals, it's because of very aggressive and very heavy call writing at 25,500 and 25,400 levels. And the put bases are starting to now come off a little, suggesting that near-term profit booking, near-term resistances are starting to creep up on the Nifty. However, the medium-term trend is still a positive. So yes, if you do get Nifty close to the 25,150, 25,200 zone, you should look at buying around those levels for a positional long trade. Bank Nifty 13th session of gains, if it closes in the positive today. So some overstretched levels, at least on the hourly charts, visible. Here too, if you get it around the 54,800, 55,000 levels, you should look to re-enter. For now, it will not be a bad idea to book profits, take some money off the table and buy again at lower levels.
Kush, what about your top picks for the day, considering the markets are a bit volatile right now?
Well, stock-specific action is a plenty, and as it happens, both of my calls are from both the sectors that are doing rather well today. Laurus Labs, that's the first one. This had a good period of consolidation, 7 sessions of consolidation. Today it went close to the 20-day moving average, but rebounded smartly from there. So if you want to create a fresh long position, 925, 940 are your targets, 895 is where you place that stop loss. But I think this stock is poised for much higher levels as well. The other one from the tech space is Tata Tech. This one too has had a very good run from 650 odd levels, continues to gain ground. Volumes also fairly decent, momentum indicators still pointing north. So 725, 740 are your near-term targets, 700 is where you place that stop loss. So Laurus Labs and Tata Tech are the call for the day.
Okay, interesting names. In fact, pharma as a sector is also at the day's highest levels as we speak right now. So Laurus Labs also fits in pretty well there. But moving on to the stock of the day segment, we're putting the focus and spotlight on Poonawalla FinCorp. It's trading with gains of nearly 12% at the day's highest levels as well. And this is after the promoters have gone ahead and increased stake in the company. Vansh is with us to tell us more. Vansh, one aspect is the promoters increasing stake, and that is something which is giving that comfort level to investors as well, because they're betting big on their own company. But what else is that you're picking up?
Yes, so as you rightly mentioned, that the promoters have purchased about 3.3 odd crore shares at a price of 452 rupees per share. Now the stock closed yesterday at about 447 rupees per share. And also if I talk about the promoter now, the promoter Rising Sun Holdings have bought the stake worth rupees 1500 odd crores in the company. Now also if I talk about the stake of the promoter, it was at 62.5% as of June 2025. Now post this infusion, the stake will further rise to 64 odd percent in the company. Now also if I talk about the AUM, that is the loan book of the company, there has been a strong 55% CAGR over the last 2 years in terms of the AUM as well, which has grown from 17,000 odd crores to 41,000 odd crores. So massive growth in the AUM is what we are looking at in terms of Poonawalla FinCorp. Let's also look at the capital adequacy ratios. Now there has been some shrinkage in terms of the capital adequacy ratio. It has shrunk from 35% to 20 odd percent, but not a concern as this is on the back of the increase in the total assets for the company. So capital adequacy ratio also remains a key factor to watch out for. Now let's also look at the Q1 FY26 management commentary. Now the management, the infusion of the stake by the promoters was already planned, and the management expects the FY26 AUM growth to be about 35 to 40%. And also the NIMs, they expect the NIMs to be revert in the next 3 to 4 quarters towards the 9% mark as well. And they have also guided for a credit cost about 1.5 to 2 odd percent. And they expect a steady ROA that is of 3 to 3.5% by FY28. So clearly all factors which are continue to be positive for this particular counter. Also, if you look at the analyst recommendation, we have 4 buys, 1 hold and 2 sells with a return potential over 11.8%. So clearly all the positive developments that are shaping up for this particular counter as well.
Yeah. And another return potential of another 12% that you're watching out for from the current market price. Thank you, Vansh, for that. In fact, before we take a question with Kush, let's quickly cut across the press conference of Maruti Suzuki, where they've announced price cuts across all segments and cars. Let's listen in.
0.49900 rupees from 22nd of September. I would like to bring one important point here, that other than the GST, we have further reduced the prices so as to make the car more affordable to the two-wheeler customers who want to upgrade to a four-wheeler. So the price reduction is up to 1.29 lakhs, which is almost reduction has happened from the tune of 12.6% to 24% across different variants. Alto K10 starts at now 3.69900, and here also the price reduction is to the tune of 1,07,600, and the reduction is up to the tune of 20% as compared to the pre-GST era. Celerio price starts at 4,69,900. Here the price reduction is 94,000, and here also the price reduction on some variants is up to 17%. I would like to just bring the kind notice of all our media friends that due to the GST, when we reduce it from 29% to 18%, the net effect of GST is 8.5%. But as I'm sharing with you, we have gone for further special offer to our two-wheeler customers so that they can upgrade to a four-wheeler. And WagonR price now starts at 4,98,900. Here also, the price reduction is to the tune of 14%. Just one point that this is going to be a limited period offer, and we will be reviewing it by the end of this calendar year. Moving to next. To premium hatches and sedan, this is a very nice opportunity for our entry-level customer to upgrade to the premium hatches and the sedan. Here, the Ignis price starts at 5,35,100. The reduction is to the tune of 71,000. Swift starts at now below 6 lakhs, 5,78,900. Reduction is 84,000. Baleno also starts just below 6 lakhs, 5,98,900. Reduction of 86,000 rupees, and Desire is starting at 6,23,800. The reduction is to the tune of 87,700. Now next, we will come to the van and the MPV category. Eco now starts at 5,18,100. Here the reduction due to GST is 68,000. Ertiga starts at 8,80,000. Reduction is to the tune of 46,400. XL6 starts at 11,52,300. Reduction of 52,000. The reduction in price of Ertiga and XL6 is to the tune of 3.5% because the GST correction is happening from 45% to 40%. This reflects to 3.5%. And Invicto, now the price starts at 24,97,400, a reduction of 61,700 rupees. Finally, coming to the SUV segment, which is the most, I think, the hot segment right now in the auto industry. Bronx now starts at 6,84,900, reduction of 1,12,600. Brezza 8,25,900. Same reduction like Francs. Grand Vitara 10,76,500, reduction of 1,07,000. Jimny 12,31,500, reduction of 51,900. And Victoris, we just announced the price 2 days back, starting from 10,49,900. So we thought it is very important to share with your media friends that this is an initiative which is being taken by Maruti to increase the motorization and to increase the flywheel of the Indian auto industry. So thank you so much, and happy to take any questions. Over to you, Raghavi.
Thank you very much, sir, for sharing in detail. Sir, our first question is from Sharmishta from Economic Times. Sharmishta-san, you can go ahead and ask your question, please. You will have to unmute yourself.
Yes. Hello. Hi, Partha-san.
After the commentary, the stock is at the day's lowest levels as we speak, and the prices have been cut on all the cars. Small cars were facing challenges due to high prices. That is what Rahul Bharti has indicated so far, and they feel the need to help customers upgrade to four-wheelers as well, and this would be a positive move. So volume trajectory with regards to the small wheeler space is going to be interesting. 12 to 24% is the kind of cuts that you are watching out for. So, the rates is something that we will try putting out as quickly as possible on our websites, and you will see that data. But very quickly, Kush, Maruti Suzuki, the stock at the day's lowest levels, the price cuts that have already been announced. And before that, we were talking about a Poonawalla FinCorp, which is seeing some strong momentum today. What would you do with both these counters?
Sure. So let's start with Poonawalla. I think there was a time when this became a fairly discovered story. A lot of retail and HNI interest had built up into this, but the stock massively underperformed, and the prices that you're seeing now were last seen in early 2024. So for more than a year and a half, the stock's not really gone anywhere, right? So if you had that kind of patience, it's not a bad idea to now take some money off the table, assuming that you bought it at same or maybe slightly lower levels. But since the momentum is building up and the volume surge has been massive on the back of the buying that you mentioned, I think this has to be a partially book a profit and partial hold kind of a setup. So yes, you might want to exit partially right now and hold the rest of the position. As far as Maruti goes, I think the view for Maruti and a lot of other auto sector names is very similar. Is that they've had a good run up. The boost that had to come in, did. The price action also followed. Now you wait for fairly healthy declines, and you've not seen those, by a whole lot. So Mahindra and Mahindra, Maruti, some of these stocks, as and when you see anywhere from 3 to 5% cuts, or maybe slightly more as well, is when you re-enter. As of now, if you have those positions, you book profit and wait on the sidelines.
Okay, so that's with regards to where your auto name like Maruti Suzuki is concerned, and as Hiral mentioned, at its day's low point as we speak. But shifting focus to the IT pack, the sector of the day arguably has to be IT, and this is on the back of the Fed rate cuts. And to discuss as to how this Fed rate cut stands to benefit IT, we are joined by Sushovan Naik, who's the research analyst at Anand Rathi Institutional Equities, joining us now. Mr. Naik, hi, good afternoon to you, and thank you so much for joining us. Your first take on this Fed rate cut as to how this benefits the IT sector as a whole, and going forward, which pockets do you think this is set to benefit the most?
So, thank you so much. I hope my voice is audible.
Yes, it's audible.
So, basically, if you look at the Fed rate cuts, the decline in interest rates would possibly help in improving the discretionary spend as far as the US enterprises are concerned. And obviously, that would be something that would be beneficial for Indian IT companies, right? And the ones which are most susceptible to discretionary spend, at least in the large caps, we have companies like Infosys and LTIMindtree, which would be more susceptible to the discretionary spends as such. And the other sector as such, which would potentially benefit, would be someone like a BFSI, and a mid-cap company like Mphasis would potentially be a beneficiary because of the exposure to the BFSI segment there, because they have almost 67 to 70% exposure there, right? So that is the way I would look at it from a impact on the Fed rate cuts are concerned.
Sushovan, taking the Fed commentary into consideration, yes, it is a sentimental booster right now. But how do you see translation happening in terms of business? Because on the back of Q1, a lot of companies refrain from giving their guidance as well because there has been uncertainty. When the translation of this rate cut happens, and by the time the companies really see that spend picking up, see that discretionary IT budgets are increasing, do you see that coinciding with the valuations right now, coinciding with making a buy call on any of the companies?
So again, here my only submission here is we would rather look at IT companies into two buckets. One is the large cap IT and the mid cap IT buckets, right? So as of now, when you look at the Fed rate cuts, 25 bips have already been done. What we expect, I guess, would be another 50 bips. So at the end of the day, the beneficiaries would be the Indian IT companies which are having more focus on the discretionary spend and BFSI focused plays. Now, if you look at the international IT companies which have released their results, right, in the last 2-3 months, effectively what is coming out very clearly is that BFSI has been one secular play that has continued to benefit. And that also gives us comfort on the BFSI focused plays, right? I think that is the way I would look at it. Within the large cap space, obviously the valuations are comfortable, the free cash flow yields are comfortable, and that is something that gives us comfort. And the ones within the large cap space which are more susceptible to discretionary spends are the ones which would benefit, and the names which I mentioned. Within the mid cap space, obviously the way we are looking at it is the BFSI focused plays are the names which we believe would benefit, and that's why I'd mentioned about emphasis in a way purely on account of the Fed rate cuts, right? So that was the way I was looking at it. I don't know if this answers your question, but this was a thought process.
Mr. Nayak, just want to understand as to how fast do you think, because this is not just one rate cut that we're expecting, right? Analysts are expecting 2 more rate cuts in this year and 1 more rate cut going ahead. How fast do you think will this accelerate the process of maybe hiring or projects that these Indian IT companies will get? And on the back of that, do you think the second half of this financial year is going to be better for these IT companies?
So even in our thematic, when we had released it about 2 to 3 months back, that was in April 25. So we had mentioned the same thing, that Q1 and Q2 is expected to be muted, right? Because of whatever is happening from an AI standpoint, from a tariff standpoint, all of those things would have an impact. But at some point of time, there will be stability as far as these tariffs are concerned, and enterprises which have been less focused on less focused on spending would at some point of time that would pick up, and that would potentially result in benefits flowing into the IT companies, right? So that is the way I was looking at it. And again, this is 25 bips now. Another 50 bips would further help the enterprises to possibly increase their spend, right? So that should translate into revenues for IT companies. Of course, if we take into consideration the fact that with AI coming in, right, there is a potential for revenue deflation that will happen for Indian IT companies. But historically, if you look at what has happened, all the technology transitions, initially there has been a lull, but after that, we have been very good at adapting to all of this. And that should basically translate into improved revenues for the Indian IT companies. But of course, for some period, there will be some amount of revenue deflation. The other thing is the discretionary spend has not been there for almost 2 to 3 years now. Unfortunately, that has now become a very cliched term. But over a period of time, we are hoping that the second half of this financial year, it should basically come back with a stabilization of the aforementioned factors, translating into improved discretionary spends and benefiting IT companies.
Okay. So Shishavan, at this point in time, if you have to look at the entire basket, and if someone really wants to start nibbling in terms of IT companies, which would be your top large cap pick and which would be your top mid cap pick?
Large cap picks, it would be Infosys and LTIM, as I mentioned. For us, it has been a large cap pick for almost 4 to 5 months now. And within the mid caps, we really like Mphasis as well as Mastech and a company called Happiest Minds. These were the 3 top picks within the mid cap space for us.
Okay, Mr. Nayak, thank you so much for giving us those insights and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, Kush, I'll come to you on this entire space. I know that you're not very bullish on IT, but considering the kind of move we've seen in the past few days and considering the Fed rate cut also, any positive momentum on any of these counters which are seeing some momentum now, any IT names?
Well, no, I wasn't very positive, but I did maintain that from a risk-reward perspective. It started to make sense to nibble into some of the names, especially the likes of Infosys. There was some positive price action, volume actions did pick up. So, yes, it did make sense from a risk-reward standpoint, and had that view for a while. Even now, if you see with this kind of push, that has come about today, the Nifty IT index is at a near 2.5, 3 month high. So good positive traction going forward. What this will do is it will trickle down the positive price action for relatively smaller names as well. And yes, I was listening to Sushovan. Mphasis is on my list as well. Coforge is something that has now started to show some traction, taking out the resistance of 1800. And among the large cap, Infosys still continues to rule the roost. So if I were to pick, I think these 3 would be my picks from the IT space.
Okay, all right. So those are the picks where course, is seeing some kind of momentum where IT space is concerned, but it's time for a very short break. But we leave you with an important word from Vikas Kumar Jain, who of CLSA. In fact, we spoke to him earlier today and asked him which sectors make a good bet right now. Listen in, as well as we'll be right back.
Some areas of discretionary, autos is one sector we went overweight a few months ago, before even GST came in. That could be one area. There could be other areas of discretionary as well. But I would say that selectively, even some staple names, wherever competitive intensity isn't that big, relatively, could still be doing very well. So I would say consumption in general should be the focus area for this tactical rally that we are talking about.
Got it. Vikas, what do you think of tech at large? I mean, does the Fed worry about the labor data mean that corporate health in the US may not improve, or is it to the other side? And therefore, could Indian tech perform on expectations of enhanced corporate spending in the US led by the Fed rate cut, or could it be the other way around?
So Neeraj, I think stock market mood will depend on how every announcement is taken by the Fed. Right now, the Fed announcement has been taken as perhaps an action taken at the right time before things go out of hand in terms of growth and unemployment. Therefore, it would be seen as something which should be able to keep growth at a reasonably strong level in the US. So I would say that it basically arrests the fear of a potential growth deceleration, which could have happened without the rate cut, is the opinion what the market has taken.
The interesting thing that I saw, and focusing on a domestic sector, was yesterday's call from your end on the upgrade, if I can use that term, on cement. Now, it's interesting, right? I mean, what's the base thesis? Is it that pricing power will come back now that the industry is consolidated? Because I think the last 10 years, the cumulative price is up, what, 5, 7, 10% maybe? So what's the thesis? Is it pricing or is it something else?
So it's multiple arguments over there. First is, slightly longer term argument. Depending on the larger players that you look at, and there's the upgrade that you're talking about was one of the larger cement players. They get into some kind of a moat around the end of this decade with the changing rules around mining and mining regulations kind of coming in. So that is something where they get into some kind of a moat. By that time, they would have increased their capacity quite significantly. So there's a host of this big capacity expansions which they will benefit from. But more from a near term, I think if you were to look at where pricing has kind of steadied and what we believe could happen in terms of typical seasonal pricing, there is likelihood that there could be surprise versus what consensus is baking in. Plus, even from a GST perspective, there are some changes that have happened, which kind of makes their position a little bit more justifiable.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
back. You're watching India Market Close, and we still have Kush Bora with us right now. Very quickly, if you see what's happening overall in terms of markets as well, a lot of chatter with regards to individual counters. We are nearly at the day's lowest level. 25,357 is an interesting mark to watch out for. In fact, last time also when we spoke to Kush, we were talking about 25,250 as being a strong support zone. But from here on, if you have to look at Pharma as an index, Kush, strong moves coming in terms of the Pharma pack. We're, I think, at the day's highest levels as well. Any topics on this aspect?
So, as far as the index goes, I think this itself has given a breakout, and a strong one at that. This is an ascending triangle breakout, which often results to further extension of the momentum that you're currently witnessing. So I would be surprised to see the index itself rise to 22,700 to 22,850 odd levels. So that's a very healthy sign. As far as the top pick goes, I think Laurus Labs, is a stock that we discussed at the start of the show, seems to be doing well, inching closer to the first target and the high point of the day. I think this is one stock that you can definitely keep on your radar. Momentum was anyway along with it. Now, Sun Pharma also starting to perk up. 50-day moving average being taken out after the month and a half. So this too could stretch the rally to 1685, about 1715 odd levels. And the low point of the day today around the 1625, 1620 zone should act as the stop loss.
Yeah, we also have Aditya Shah of Hercules Advisors joining us now. Aditya, on the charts, Sun Pharma and Laurus Labs is something that Kush is finding attractive. Anything fundamentally that you are seeing attractive in the pharma space where valuations are also reasonable?
So, for both companies, I don't think valuations are reasonable personally. So, from my perspective, I think look to buy, brand CDMO API space. That looks really very interesting. So you may look at something like a Syngene or a Biocon Pharma, for that matter, DV Labs or Laurus Labs as well, where brand CDMO and API is the key to go forward in the future. But again, valuations are not cheap across any of these companies, and you have to slowly and steadily invest in these.
Aditya, just stay with us. I think some issue with your audio. Laurus Labs is your pick as well. In fact, even Kush Bora has a positive view in terms of Laurus Labs. But let me head across to Jasmeet to tell us which are the stocks which are buzzing in trade today. Over to you, Jasmeet.
Well, right, yes, thank you for that. I have three stocks which are buzzing in trade today. The first one is Cohance. Well, the Cohance Life Sciences, if you see, the stock is down nearly 6% in trade. Well, this is after the block deal where the change in hands took place, about 34.2 million shares. That's roughly 8.9% of the equity. When you look at the previous news, initially, Jusminal Holding was supposed to offload 5.1% stake for almost 800 odd crores. And if you look at the holdings which he has back in June 2025, it stands at 33.34%. Well, that's the reason the stock is buzzing in trade today, and it's nearly down 6%. The next one is a brokerage known as HSBC on Page Industry. While the Page is down roughly 3% in trade after they maintain a reduced rating for the particular stock. While they have also cut the target price to 41,040 from 41,070 priorly. So what they say is the launch of the new segment of JKY Groove is not a potential move for the company, while they also say that the material cost is stabilizing, which is a good thing, but again increasing employee costs given the ramp up will lead to further reduction. While they also say that the cut in PAT by 3% on the back of weak demand. While they also mention that the GST rate cut will not cause much of a benefit for the company. The last one is Captive Infra Project. While the stock is nearly up 3% in trade today, while this news comes after the company wins a project worth 1,500 odd crores. While the project is to build ultra luxury towers in Mumbai Mahalakshmi region. If you look at the order book of the company, it stands at 11,000 odd crores as of June 2025. So these are the three stocks in my radar which are buzzing in trade today.
Okay, Jasmeet, thank you so much for bringing us those details. Kush, anything on Capacite Infra Projects up 1.8%, cooled off, of course, from its day's high point, but that's quite a significant order for them. For a 2,800 crore market cap company, a 1,500 crore of order win is a big one. But anything on the charts that you're picking up?
Very interesting moves, and not just today. In fact, I think maybe market had a sense of it, or maybe it was just in line with the market moves that the stock's actually risen quite a bit from 280 odd levels in the last 10-15 odd sessions to where it is at today 325. Yes, you're right, it's off the high point of the dip, but I won't read too much into it. Market's also seeing some profit booking, so that was par for the course. But the kind of volume setup that it's had over the last 2-3 years and the massive surge on volumes that you're seeing today again does put it on a good footing. Also, there is a falling trend line resistance breakout that has come about today. So yes, couple of indicators, checking the box for capacity infra. I would continue to hold on to this one if I had, and I would keep a stop loss near the 310 mark. Previously resistance, now will act as a support.
Okay, Kush, what about Cohen's Life Sciences? Anything on the charts that you're seeing there?
Well, again, the price action is not as exciting. There has been, I know, as Neeraj called him, my partner in crime, Parag Thakkar also had a positive view on this one on Monday. Right now, it's not translating into price action. So I would wait and watch. There is a strong support near the 880, 890 zone. That should be respected, in the kind of, fall that you're seeing today as well. But on the whole, price action hasn't really picked up as much. Volume action has, but on the downside. So I would wait and watch, see if the 880 strong support zone is intact and indeed it's held or not. Then perhaps it could start consolidating sideways.
Okay, that's Cohen. Staying with the Pharma pack, a bull versus bear segment has Biocon. With the kind of upside that's coming in today's session, some bit of strength at the day's highest levels, gains of over 3%. But the approvals that are coming in from the US FDA, would that recommend a buy on the stock? Let's go to Varsha to understand the bull case and the bear case, and then we will take a commentary from our guest. Varsha, over to you.
Well, thank you so much for that. The stock is buzzing because Biocon's subsidiary, that is Biocon Biologics, have received two approvals from US FDA for two of their biosimilar products. But the stock is buzzing on that. But the interesting point here is already this market is, there are a lot of competitors who are already present into this market. 4 competitors have already launched the products. 6 more companies, including the likes of Dr. Reddy's and Teva, will actually, launch more products into this. So a lot of competition is already present. But the original drugs, if I were to talk about, because these are biosimilars, the original drugs have a, sales of around $5 billion as of FY24. But for Biocon Biologics, the biosimilars is to have 85% of price erosion because of because of a lot of competition that these products have. So analysts are estimating almost $16 million of revenue for FY26 and $50 million of revenue for FY27. So also the upcoming launches of biosimilars, new biosimilars and GLP-1 products will be the next leg of growth for the company, will also reduce the revenue contribution for them. But US FDA inspections and will actually impact revenue growth if this comes into observation, or if some warning letter, so these are the potential risks that the company has. Moving on. Management is expecting double-digit growth, revenue growth for FY26, but near-term cost pressure will actually weigh on the generics business, affecting the overall revenue for this company. Next is, if you see the Syngene, which is then a subsidiary company for Biocon, so double-digit growth is expected over there also, but Syngene faces lower operating leverage and also higher depreciation from new facilities will impact the overall growth when it comes to Syngene. So overall, the Biocon is buzzing on this, the US FDA approvals for 2 of their products, but a lot of competition is already there in these products.
So, Varsha, is the bull case stronger or the bear case weaker?
I would say bull case is stronger because you have to consider the GLP-1 products and the other biosimilar products that the Biocon is going into. And Biocon Biologics is the next leg of growth when it comes to overall, Biocon.
Interesting. Let's take that with Aditya Shah of Hercules Advisors as well. Aditya, welcome to the show. In fact, I'm going to take questions on 2 different counters with you. One is Biocon. Varsha just got to us the bull and the bear case scenario. The stock is seeing some strong moves at the day's highest levels. And another sector that you track pretty closely, our Poonawalla FinCorp as well, is doing phenomenal in trade on the back of the promoters' increasing stake. What would you advise investors to do with both these names?
So let's first talk about Biocon. Biocon has been investing very aggressively in the biosimilars business over the last 5 to 7 years. It's a capex heavy business, and it is now starting to show fruits over the period of next 5 to 7 years. So that is positive for Biocon, but this does not take away from the fact that Biocon is a capex intensive business, and the biologics business will continue to require cash. So from my perspective, as I was saying, I would tend to look at CRAM, CDMO space or the API space where it is not as capex intensive, and the price erosion on biosimilars would be steep as more and more players continue to come into Biocon. So something like a Syngene or something like a Piramal Pharma or something like a Divi's and a Laurus look better to me. They are the top picks within this sector. That is on the pharma sector. Now on Poonawalla FinCorp, the company is continuing to diversify its book away from the unsecured side of the book to secured side of the book as well. So that is a positive. However, the valuation of the stock is extremely crazy. It is at about 4 to 5 times price to book, and I would not want to invest in a company where it is trading at about 4 to 5 times book. Mind you, just 1.5 years ago, they had a massive slippage on the book, and there's no guarantee that this will not happen again. So from my perspective, I would tend to avoid companies trading at about 4, 5, 6, 7 times price to book.
Okay, all right. So that's with regards to where both Biocon and Poonawalla FinCorp is concerned. But Kush, there is one more counter that's buzzing today, and this on the back of volumes as well. That's Prism Johnson, and it's up 13% as we speak. Good momentum coming in. Do you think that's sustainable?
No, I think this is a more book profit kind of a candidate. As you rightly said, the stock is 13% up even now. But if you see the high point of the day was 176, so considerable amount of profit booking already seen. This is perhaps like an exit opportunity for whoever's been holding on to it for some time. There were resistances and those are being taken out. But what I'm more concerned about is the kind of sharp fall that it's had from the high point of the day. So don't enter now. With the kind of big move that it's made today, it's already close to overheated territory, so risk reward ratio not favorable. All in all, no entry suggested right now. If you have a position, you're better off booking profits at the current level.
Okay, better off booking profits at current levels. That's the word coming in with regards to where Prism Johnson goes right now. Let's quickly look at a few of the other names. HDFC Life at the day's highest level, strong moves coming in on that counter. Aditya, what would you advise investors to do with the HDFC Life?
Effective September 22, the GST on life insurance products is going to move away, and that is a positive fillip for the entire sector, particularly term plan and other life insurance products. That would give a fillip. So from my perspective, within the life insurance space, HDFC Life and LIC, because of its valuations, look really very interesting stocks.
Okay, all right. Now it's that time of the show where we get in my colleague Soumit Sarkar, who joins us with all the chatter that he's hearing from the dealing room. All right, Soumit, what are you hearing today?
Well, multiple stocks that remain in focus. Firstly, it's IREDA or IREDA, what we call it as. Dealers are indicating that there are buy flows on large HNI desk on this counter. Prominent HNIs have been accumulating this counter in trade today, so keep an eye out for IREDA. Second stock on the list is V2 Retail. Now, there are buy flows on PMS desk, and dealers are indicating that the second quarter is expected to be a blowout quarter for V2 Retail, and hence we are seeing such kind of a move in this stock in trade today. Apart from that, there are 3 stocks on the list on the next one. It's Samman Capital, Bellrise and L&T Finance. Dealers are indicating that there are buy flows on institutional desk at lower levels on all these 3 counters. That is Bellrise, Samman Capital and L&T Finance. When it comes to Edelweiss, now that stock has been range bound for quite a while, and this is on the back of a overhang that has been there on the street, or the buzz that has been there on the street related to a potential block deal that could happen anytime soon. Now dealers are indicating that this block deal is expected to happen in the next couple of days, and as soon as that happens, there could be a sharp bounce back that we could see in the share prices. So keep an eye out for Edelweiss Financial as well. Aurobindo Pharma, now that stock was down in trade yesterday because of the buzz that penicillin prices have fallen sharply in the market, given the fact that there have been a lot of cheaper imports coming in from China. But what now dealers are indicating is that there could be a push by the government side of imposing MIP, that is minimum import price, for penicillin drug, which could be beneficial for Aurobindo Pharma, and hence we are seeing this kind of a move in the counter in trade today. Another stock on the list is Vikran Engineering. There's a buzz of a big order win announcement that could come in anytime soon from this counter, and also a prominent investor is buyer in trade today in Vikran Engineering. And lastly, Lotus Developer. There are buy flows on large HNI desk. A positive development is expected to happen soon in Lotus Developer. So keep an eye out for that counter as well.
Interesting ones coming in terms of the herd on street, and I think Aurobindo is absolutely promising. In fact, last 1 month, if you just pull up a 1 month chart of Aurobindo, and thanks Somit for that, but Aurobindo Pharma at the day's highest levels, and that's the momentum that Pharma index is seeing today. But in the last 1 month as well, the trajectory is kind of upwards for this one. And the other one is V2 Retail as well, and I think 22nd of September onwards itself, there could be some bit of positivity that could be coming in any of these names, and that accumulation has already started happening. Kush, what would your view be with regards to V2 Retail as well as Aurobindo Pharma?
So V2 Retail, very clear traction, very clear volume action, on this one yesterday, today as well. And I always, get more encouraged by the volume action than the price action. I think this is perhaps, a momentum that could sustain still some distance away from the overheated territories. So 1920 to about 2000 odd levels, very much on the cards with the kind of momentum that the stock is seeing. If you do have a position, keep a stop loss around the 1800 mark. Aurobindo as well. I mean, we've discussed how the entire sector is doing well. This is a beneficiary of that, near the high point of the day towards close. Always an encouraging sign. I think an up move towards 1150, 55 cannot be ruled out, but then you've got the 200-day moving average resistance that might act up. If I can just take quick 30 seconds, what I'm more excited about are the other two stocks that he's mentioned, Swami. Sammaan Capital and LTF. The reason being, both of these calls, both of these stocks we've given out as calls. And LTF at around 200 levels about a month and a half or so ago. While I am still very constructive on LTF, I would suggest with the kind of moves that it's already made, you'd be better off buying it at declines close to the 235 mark, but very constructive on LTF. And likewise on Sammaan Capital, it had a big gash about a month or so ago, a big up move, consolidated sideways on the back of very thin volumes, and now starting to pick up again. So keep an eye on this one as well. I think 145, 152 are very good levels, in the coming days to watch on Sammaan Capital, and 133 should act as a stop loss. So these two still very exciting names.
Okay. All right. Now, some positive news coming in on the trade tariff front. CA Nageshwaran points out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances. But there's optimism too. He believes that by November 30th, the penal tariff could be rolled back. Listen to those comments.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. Yes, the not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
Okay, now, in other developments, SEBI has introduced a slew of measures related to REITs, including the classification of REITs as equities. Listen in to a word coming in from the SEBI chairperson, Tuhin Kanta Pandey, about this. And this was at the sidelines of the Infrastructure Conclave 2025.
To further strengthen this growth trajectory and promote ease of doing business, SEBI has introduced a series of enabling reforms. Some of the recent measures include expanding the scope of strategic investor for REITs and InvITs to facilitate wider investor participation. 2. Reclassification of REITs as equity for investment by mutual funds. 3. Introduction of SM REITs to make smaller real estate assets more accessible to retail and institutional investors. 4. mandating investment managers of InvIT and manager of REITs to provide an option to the unit holders to attend the meeting through video conferencing or other audiovisual means for all unit holder meetings. 5. Enabled e-voting option for unit holders to encourage their greater participation in decision-making process.
All right, the power of this consistent 10%, 11%, 12% yield sometimes is lost on investors, and which is what I think was the explanation that some of these measures, some of these instruments could be very positive. Well, listed REITs, InvITs fall in that list as well. And let's try and understand from somebody who manages a business like this, IndiGrid. Harsh Shah, Managing Director of IndiGrid, Johnson, right now on the show to talk about this. Mr. Shah, thanks so much for taking the time out. And just for the benefit of our viewers who may not understand your business entirely and the importance of how a REIT being classified as an equity instrument may play out, could you talk to us a bit about that?
Sure. So what we run is an InvIT.
Yeah, sure.
But I think this is an extremely welcoming move from SEBI. We have been working on it, requesting it for a very long time. I think it puts us and enables REITs to be part of liquid indices. Unfortunately, SEBI has decided to wait for InvITs to be classified as equity for a variety of reasons. One, including that majority of InvITs are private InvITs today. But I think as the experience of REITs improve liquidity, I do feel and hope that SEBI will consider even InvITs or publicly listed InvITs to be part of equity index. How it changes is an important distinction. InvITs and REITs are being taxed as equity. When you transact on it, you pay STT just like equity. Globally as well, InvITs and REITs are considered as equity instruments. However, as in 2016, at the inception of these vehicles, they were considered hybrids, and which restricted these instruments being part of indices, whether it's real estate or infrastructure indices, for some time, even after a fantastic track record of performance over the last 7-8 years. But I think now gradually things are improving. Last year, we saw the taxation became in line with equity, so it was 1-year holding period. The second thing that changed now for REITs is that it's becoming part of equity, so we do expect a lot more inclusion in the indices will take place for REITs. Liquidity will improve, and therefore better price discovery will take place, and investors will be able to buy with better liquidity or sell with better liquidity. And I think, and I hope that eventually this also applies to publicly listed InvITs, which are far and few right now in terms of proportion, but we do hope that that's also needed for InvITs.
Good afternoon, Hiral this side. Exactly what you're saying. A similar fashion, a similar treatment should be given to, InvITs as well. But with this kind of a move, it makes it easier for mutual funds to actually invest in these instruments. And it opens up the asset class for a lot of retail investors as well. If this expands, how do you see the benefits flowing in as well to investors?
Yeah. I think it's a very simple reality. It's been now, including us being one of the first ones, now there is a track record of 8 years of listing. We have delivered over 100% total returns, so more than that over a period of 8 years. Investors have made consistent distribution, as he was mentioning that we distribute 10%. I think we started at 11 rupees a unit. Right now we are distributing 16 rupees a unit. There is consistent distribution and growth. Both has taken place. Now, what evolution has taken place initially, it was restricted to institutional investors and investors with 10 lakhs. 3 years ago, SEBI allowed retail investors, and gradually a lot more retail capital has already come in, and they are experiencing the power of yield and compounding that happens with that. And they're feeling it. So the retail participation and penetration on these products is increasing day by day. And that's great because they are able to own a piece of Indian infrastructure, a piece of Indian real estate, and earn a healthy yield out of that. And SEBI has already secured these instruments to a great extent with a leverage cap, with mandatory dividends paying out, and a lot more regulation. So these are extremely regulated platforms, our regulations are far more than listed company regulations. So they're very well regulated. And therefore, that gives investors opportunity to own Indian assets and earn a healthy yield out of that. And I'm not comparing it with a bank deposit, but yes, InvITs and REITs offer a much better yield and much better risk reward to investors to park in that asset class in their portfolio mix.
Agree. And thank you so much for giving us those details, those insights as well, Harsh. Really appreciate your time. We out of time on the show completely, but we need to take a break or slip into a break. On the other side, we get you the closing strategies and lots more. Stay tuned.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
We're the only country with such a large population of youth and युवा.
Pure talent और कुछ नहीं है.
बुलाने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का.
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने.
We need to work towards an egalitarian society, regardless of gender and orientation.
Back with India Market Close right here on NDTV Profit. Well, let's look at some of the key volume buzzers in trade today. HDFC Life has gained 23% in the last 6 months. The stock is up nearly 3% today with volumes nearly 33% versus the 20-day average. So 33% is not very high. So the volume is not necessarily the best, but the price action looking very solid. But the key trends is that it was flat for such a long time and the CAGR returns haven't been impressive. Just that seems to be making a breakout move today. The business performance, remember the individual APE for HDFC Life grew about 21% CAGR for 2 years till FY26. The 2-year VNB CAGR has been 15% till at least Q1 FY26. Market share has gone up about 70 basis points YOY as well. And the outlook that the company is given, well, the GST waiver on individual insurance policies will aid growth. They're the largest mix of individual book. The Q3, they've said, should see strong growth. No comments on Q2 necessarily, but Q3 for sure. And GST on commission paid will need to be absorbed, which may hurt a little bit of profitability. 32 analysts rather, have a buy rating, with 5 having a hold and only 1 analyst on the sell side having a sell rating. So it's quite a day for HDFC Life. And let me ask Rajesh Palvia, who joins in right now with his thoughts about HDFC Life. I'm sure Aditya tracks it as well closely. He tracks almost everything related to finance. But Rajesh, can I start off with you and talk about the micro first, HDFC Life? What do you feel of it from a trading perspective?
So stock is in uptrend only, and looking at the long-term structure, stock is in now consolidating since last couple of weeks. But overall structure is bullish. On the downside, 750 is the key support area for this consolidation range. I think any breakout above 800 can take this stock further higher towards 840, 860 zone on the near-term to short-term perspective. So buy on dip should be the strategy, as overall short to medium-term structure is also showing a sign of recovery. And looking at the near-term consolidation, we believe that there could be a high possibility of breakout in the near-term perspective, and then possible target towards 840, 860 we may witness. So one can buy and accumulate with stop loss of 750.
You spoke about, Aditya, you spoke about HDFC Life earlier in the show, but my question would be, if one wants to insurance or a non-lending financial business, right, is HDFC Life or insurance the best bet, or would you look at something other than insurance, life insurance players?
So from my perspective, AMC space will continue to be very interesting. Within the AMC space, someone like an HDFC AMC, or for that matter UTI AMC, also has done pretty well. Over the period of next 5 to 10 years, the financialization of savings theme will continue to move forward. Mutual fund is one of the spaces which will continue to benefit, and the other one is the life insurance space. As I said before, the exemption on GST for both health and life insurance is positive. For life insurance space, purely from a growth perspective, HDFC Life continues to be a very good prospect. But from a valuation perspective, LIC continues to be one of my favorites, as the valuation there is a little bit on the cheaper side. And once growth and the margins continue to recover, the stock can do pretty well.
Okay. Rajesh, the markets have bounced back. In fact, the Nifty 50 is again back into that 25,400 plus level territory. Even the Bank Nifty is seeing gains of about 0.4%. Your view with regards to where benchmarks are concerned, and of course the Bank Nifty as well?
So looking at the structure, overall structure, Nifty is looking bullish, as 25,300 is the key support area for this up move which we are seeing in the Nifty. So till we are holding 25,300, one should remain on the long side of trade for trading point of view. For positional perspective, 25,200 needs to keep as a stop loss. On the higher side, the major call concentration area is still placed at 25,400, 25,500 zone. So I think any breakout about 25,500 can take this Nifty further higher, as call writers forcefully needs to cover their position, and then possible rally may see extension towards 25,750. That's the target where we are projecting for Nifty at this juncture. For Bank Nifty, we are almost trying to penetrate 55,800 resistance area for Bank Nifty. If Bank Nifty manages to cross this level and sustain above those levels, so maybe next target for Bank Nifty we may witness towards 56,200 in the continuation of this up move. So here also 55,500 is likely to act as a good support area for near-term perspective, as major put-based concentration is placed at around those levels.
Picks for the day?
Two stock idea. One is from the pharma space. We have witnessed, strong buying action in most of the pharma space. Laurus Lab is showing outperformance. The stock is almost trading near to its all-time high trajectory. The way stock is making higher top, higher bottom formation, we believe that here we could see further more outperformance to continue. 945 we are projecting target for trading point of view. On the downside, 906 needs to keep as a stop loss. The second stock is from the real estate space, that is Phoenix Limited. If we analyze the structure for this stock managed to give breakout of contracting triangle formation on the weekly chart. And this breakout is clearly indicating that there is a potential of further more upside rally towards 1800. But for trading point of view, we are projecting target of 1670. So one can buy and accumulate this counter also. On the downside, 1604 needs to keep as a stop loss.
Okay, all right, so that's the view. In fact, Laurus Labs was on Kush's list also today with regards to where technicals are concerned. So two constructive technical views on Laurus Labs coming in. But the other counter on the Nifty 50 that is buzzing today is Eternal. Let's try to pull that chart up and see the spike that we've seen in the past few minutes, up 2.8% as we speak. There was a Goldman Sachs note today on Eternal, which have maintained buy and hike the target price to 360 from 340. What they're saying is that there is accelerating growth momentum with improving margins that they're seeing in Eternal. Blinkit EBITDA break-even for this segment, they're expecting by December 2025, which will be the key catalyst for the stock going forward as well. And they expect Zomato to remain one of the fastest growing internet companies. In fact, even CLSA has remained bullish on this counter. Aditya, I'll come to you on this one. Your view with regards to where Eternal stands?
So from my perspective, the growth that Zomato will bring in is priced into the stock. So the main point for the stock is how does Blinkit or even for Swiggy, the Swiggy Instamart business really shapes up, how they are able to cut down losses and then move forward from there. So from my perspective, the stock has rallied tremendously from about sub 100 levels to about 330 rupees. From my perspective, it is now expensive. Also, I don't understand how and when will the Blinkit business turn around. But from my perspective, I would tend to avoid this stock at this stage.
Eternal at the day's highest levels, but seeing the positivity and the uptick that is coming in terms of the markets right now, I think this is picking up cues from the commentary that we've seen from CEA, where news is coming in on the trade tariff front. Neeraj, what is interesting over here is that CEA Nageshwaran has pointed out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances, but this will probably go away by the 30th of November, and this is what he believes, and the penal tariff could be rolled back. And that is a very strong comment coming in from the CEA, and I think from then, let's first just quickly listen and then we can dissect this.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. Yes, not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
Okay, now viewers, we need to make a distinction here. The chief economic advisor has said that he believes, he has no basis to say this, but he believes that post-November or post-November 30th, the penal tariff, which is the additional 25% tariff, goes away. But almost everybody has said this, and you can see it from the market action. Since the time the first Truth Social post of US President Donald Trump came in, which spoke about wanting to meet my dear friend Narendra Modi. I think you've seen the markets take a constructive stance. We were in Delhi then.
Yes.
And the last 8 days, I think this has happened. This is as big a statement as it goes from an Indian official, if you will, chief economic advisor. So technically not an official, but saying that he believes this. And I think Hiral is right, that somewhere from the time that this answer played out, you've seen a very sharp uptick in the market.
In the markets, and that's where the recovery has started. I think probably the market is sensing that sentiment, that positivity, and probably that little bit of buying interest that is coming in. In fact, let's just quickly take one question with Aditya on this. Aditya, the commentary from the CEA that there is a potential, and he's probably taking it with a pinch of salt also right now, that by the 30th of November, the 25% penal tariff will go away. And on that comment, you're seeing the markets nearly recovering. We're above that 25,400 mark. Any additions that you would have in terms of commentary?
So credit to Prime Minister Modi, he's handled the situation really well, and it was just a matter of time before tariffs went out, because the US also views India as a strong partner to a whole host of geopolitical reasons as well. So from my perspective, I was never worried about these tariffs, because if not now, 6 months, 12 months, the tariffs will move away. And once the tariff does move away, it's business as usual. So I'm not surprised that it has happened this fast. All thanks to our Prime Minister and the government. They've done a really great job. And this is really very positive for the market, boss.
Buy into this uptick. I'm just trying to think of it that way, Rajesh, that is this Nifty uptick good enough to buy into?
Definitely. So I think trend is likely to remain on the positive side, as broader market is clearly showing sign of confidence. And yes, one can remain on the long side of trend. Even at this point also one can buy. We are projecting target of 25,500. That is almost closer to this current market price. But once we crosses, I think 25,700, 750 zone can be achieved in the next couple of days.
Okay. Aditya, a couple of other things, right? After a while, I mean, 2 or 3 of these stocks which were spoken about in what dealing groups are recommending in the session today are starting to perk up. We're seeing an AU Small Finance Bank, for example, starting to make a bit of a move in the last few minutes of trade. Somewhere along the line, Piramal Enterprises, yet another % move. What do either of these 2 stocks, do they look good on the charts for a trade? Rajesh?
Question for me?
No, Rajesh, from a trade perspective for you.
Yeah.
Sorry, did I say Aditya? My bad. Rajesh, I meant to ask you from a trade perspective, AU Small Finance Bank.
Okay, so as a banking pack, yes, we are holding bullish view, as most of the large cap and mid cap banks are doing good, and the way most of the stocks are almost trading near to their breakout level, I think there would be continuity in the banking sector. AU Small Finance Bank is now managing to give breakout of its falling trend line on daily chart, and almost it's negotiating with its 20-day moving average. So after a long corrective move, there is a sign of reversal which is coming on the near term chart. Any move beyond 725, 728 can take this stock further higher to 745 to 755 zone. That's the next target for the stock. So at this juncture, those who are already long in trade can hold the position with the stop loss of 708.
Okay, and I wonder, Aditya, Piramal Enterprises, I mean, credit to Parag Thakkar rather, 4 days ago, he kind of spoke about it in a table thumping buy, say his view. Of course, your view may differ, but I'm just wanting to your view, because his view is that from 400, 500 crores to 1300 crores in FY26, which they've guided for, to potential 3,000 crores of profit in FY28, maybe ROE is not really hitting the double-digit mark, but improving. At the current market cap of 24, 25, 26,000 crores, he liked Piramal Enterprises. Do you like Piramal Enterprises or no?
So I saw your interview, and he bang on that the valuation of the stock continues to remain extremely cheap. That is one of the positives for the stock. But the valuation is cheap because of a whole host of reasons where Piramal Enterprises has failed to deliver returns with respect to their promises that they have made over a period of the last 3 to 5 years. So now the DHFL book has stabilized for Piramal Finance, and as the credit upcycle continues, I think companies like Piramal Enterprises and whole host of NBFCs will continue to deliver a solid set of numbers as time goes on. So from my perspective, it is a tactical bet over a period of next 1 or 2 years, purely from a valuation perspective and the credit upcycle that is taking place over a period of next 1 or 2 years.
That's with regards to where Piramal Enterprises stands. The other aspect is some volume buzzers that we are seeing in trade today. That includes Prism Johnson that we talked about, 70 times 30-day average. Poonawalla FinCorp, 51 times its 30-day average. Heritage Foods, Tata Investments, Supreme Holdings. Heritage Foods from all of these 5 counters looks interesting because they've also now come out and said that, an official statement, of course, here that they've reduced prices of long shelf life, UHT milk, ghee, butter, as well as cheese and paneer, and on the back of that the stock has been buzzing in trade today. In fact, we spoke to Srideep Kesavan also yesterday about this aspect, and he said that he will be passing on the entire benefit to the consumer. Rajesh, I'll come to you on the charts for Heritage Foods. Any momentum that you're spotting there? What is the support and resistance that you're seeing?
So today's volume is quite encouraging, and the way stock managed to give breakout of almost 10-12 week consolidation range, it's a fresh breakout of this consolidation, and looking at this breakout with the volume action, we believe that if it continues to trade above 510 level, I think stock has potential to continue for more upside towards 565 to 580 zone also. So I think one can hold the position with stop loss of 510.
Okay, all right. So that's the view with regards to where Heritage Foods is concerned. But today on our special segment of Profit Intelligence, we put the spotlight on Balkrishna Industries. The stock has been underperforming versus Nifty Auto Index, which has been the best sectoral gainer in 2025. What has been dragging the stock? Will the counters see any upside soon? Varsha is here with all the intelligence on this.
Well, thank you so much for that. So, if you see Nifty Auto has gained almost 17% since August 1, and majority of the stocks, auto stocks, have also given over 20% returns from the likes of, Maruti, Eicher, Hero Moto, TVS Motors. But this one stock, that is Balkrishna Industries, if you see since August 1, it's down almost 2 to 3%. Now, let's see what are the key triggers for this underperformance when it comes to Balkrishna Industries. Number one is, of course, the tariff impact, because 40% of the tariff has been borne by the company, which will eventually impact now their margins. So, as of Q1 FY26, 40% is borne by Balkrishna Industries, and 15% of revenue comes from the US market. So one is tariff impact. The second is higher India mix. So if you see 35% of business comes from India, that is from domestic market, which is a margin dilutive for them, and it has an impact on gross margin. The next key trigger, which is actually impacting Balkrishna Industries, if I were to talk about, is the weak European demand. Now, we all know the headwinds that Europe market is facing, and because of higher input costs, the demand is getting impacted, and there's been a weak farmer sentiment, and there's no near-term revival which is expected. So, weak European demand is the other trigger for Balkrishna Industries, which is not working in favor of them. The most important thing over here is the diversification drive. So Balkrishna Industries have diversified into, so they make off-highway tires. Now they are going into truck and bus radial and passenger car radial tires. Now what is the issue there? One is, this is a low margin business. You have a lot of companies into this market, so there's a lot of competitors already present into this market, and company expanding into this segment creates an uncertainty, and investors don't like this uncertainty. And Balkrishna Industries is expecting 5% of market share into this segment by FY30, which seems quite impossible or quite difficult. So this is the main reason why investors are not liking Balkrishna Industries. While analysts on the street have -1% return estimate, so they are also not bullish. But onto the valuation, if I were to talk about current valuation, if you see current P is around 33x, 1 year forward is 25, last 5 years average is at 30x. So not much a premium valuation that the Balkrishna Industries has got. But everything is not bad about this company. Let's talk about some positive impact also. Onto the tariff, all competitors have this tariff impact, and the pricing gap remains similar post tariff. And management, when it comes to EBITDA margin, they have given guidance of almost 24 to 25% of EBITDA margins for FY26. Even for FY25, they did almost 25% of margin. And the GST, the 2.2, the new GST revision will actually boost up demand for Balakrishna Industries. So overall, I think the diversification drive that the company has done is, investors are uncertain about that expansion.
Diversification is something which is making it a downer. Thank you, Varsha, for all of that. In fact, a quick question with regards to Aditya on this. Balakrishna Tires are underperformer versus the entire auto pack, which has been buzzing in trade. Would you be a buyer? Do you see a recovery on this one?
So tires is a very competitive business. Balakrishna Industries is coming out of the off-market business that they've got into the retail business, and I don't know how that will play out. So from that perspective, rather than betting on a tire company, auto ancillaries continue to be my top picks. Something like an RSCL Garetech or something like a Motherson. Those companies look really very restricted. For that matter, Sona Comstar also, although it is enrolled into a problem, that also looks really very good.
Okay. Well, let's try and figure out some other stocks which are, moving up in trade, if you will, and we take the BTST as well. But I just want to mark that Asian Granito is up and about, High-Tech Pipes is up and about, Eternal we spoke about being up and about, Ashok Leyland has given a bit of a spike as well, or at least hits the all-time high of 139 or thereabouts. But look at that, some very good charts. And we already spoke about Laurus Labs. It's now at 924, trading at all-time high levels. So really strong show by each of these BTST trades. And Rajesh, since you recommended, I think, Laurus, and in the past you've spoken about Ashok Leyland as well, give us a view on whether you would buy each of these at the current levels as well.
Yeah, definitely. Laurus Lab, one can buy at current level also. Even Ashok Leyland, this stock is also looking attractive. I have identified this stock also. But so looking at the overall structure for Ashok Leyland, there is a fresh breakout of a brief consolidation. The way stock is, moving in higher top, higher bottom formation on a daily, weekly chart. Stock is moving in up sloping channel on daily chart. So I think sustained buying action is taking place in this counter. And I think furthermore, outperformance is likely to be there as stock has broken its, long consolidation range. Almost after a year of consolidation, stock managed to give breakout of August 2024 swing high. So we holding bullish view, and we are projecting to 170 on a positional perspective. On the downside, 128 needs to keep as a positional stop loss of Ashok Leyland. For BTSC point of view, at this juncture, we are liking KFin Tech. If we analyze the overall structure, stock was in downtrend. And now, after a consolidation of last 6-7 week, now stock managed to give breakout of this consolidation range. Stock is comfortably now holding about to near-term, moving averages. So we believe that KFin Tech may extend its gain. 1170 we are projecting target for BTST. On the downside, 1125 needs to keep as a stop loss.
So KFin Tech coming in out there. Remember today, I think there was a note which said that KFin Tech and the others, there was a global note which said that they're not very constructive, but these stocks are doing rather well for themselves today. Aditya, when I look at the CDMO universe, it is one stock that has done well, that is Laurus. It's trading expensive relative, and with reason maybe, but relative to a Newland, relative to a Cohance, Divi's, what have you, right? Or maybe Divi's is maybe slightly more expensive, but with reason again. Would you buy a Laurus? I mean, a trading call is separate, but an investment call, would you buy a Laurus or would you buy some of the other CDMO plays?
So over a period of the last 1 or 2 years after the fiasco of guidance and guidance not being met, Laurus had fallen down to about 300, 350, 400. Until thereon, as the business performance has continued to come back, the stock price has risen. Stock price is now discounting a lot of growth that will happen over a period of next 1 or 2 years. So from my perspective, at these levels, I will not initiate any new investments. But having said that, if somebody is invested in Laurus Labs, they should continue to ride Laurus the story of the next 5, 10, 15 years. And as the expansion on the FDF and the CDMO space continues to come online, the company should do really well. Stock will take a little bit of breather, after which it will move on. So no new investment as of now. Let the stock correct for a little bit and then invest. Anybody who has an investment can continue to.
Laurus Labs, in fact, a lot of positivity on this one. Heritage Foods is another one that we did speak about as well. That stock is doing really well in trade on the back of the price cuts as well, 8.5% upside. In fact, we did have a chance to speak to the management. That's Srideep Kesavan yesterday. Let's quickly understand what he had to say in terms of the impact of the price cuts that they are taking. And to be noted, it's mainly on the value-added products, not on the plain vanilla products.
It's an immense opportunity for all of us in consumer goods, especially in the dairy segment. And I say this because dairy is one category which touches 100% of all Indian households. So while GST reforms impact so many various categories, but I guess dairy probably has the biggest impact because of how broad-based it is, and the frequency of purchase of dairy products are so high. We have already announced that we will be passing on the entire benefits of the GST rationalization to the consumer, and we have already started preparing to take productions so that on 22nd of September or a day before, we have these new prices on the shelves. As per the GST Council's decision, the products that are primarily benefited are, first of all, is paneer and UHT, which is long shelf life milk. It's not the fresh milk, it's a long shelf life milk. And paneer have moved from GST rate of 5% to 0%. With this, we at Heritage, we are expecting the paneer prices to drop by 24 rupees a kg.
Okay, we heard the management saying that they're going to pass the entire benefit of GST rationalization to the customers. Heritage Foods seeing significant amount of uptick in trade today. But with that, Aditya and Rajesh, thank you so much for taking out the time and giving us all those insights throughout the show today. Let's take a quick look as to how the markets are closing today. Nifty 50 well above that 25,400 mark. We're again above the 25,400 mark, and that's where we are closing at, up 0.04%. The bank Nifty also closing around 0.4% higher. Even in terms of the Nifty 50 heat map, let's try to pull that up and see what stocks have in fact led to that gain. Eternal topping the chart right now, up to almost 3% as we speak, followed by HDFC Life, Sun Pharma, Infosys, Cipla. Some IT names and pharma names have done very well in trade today. But something that's been under pressure, Coal India down 1.7%, Bajaj Finance down 1.2%, Trent continues to be under pressure, down by about 1%. Something like a Tata Consumer, Apollo Hospital and Asian Paints are also closing in the red. Let's try to pull up the advanced decline ratio and see as to how the broader markets are looking like, because that will give us a picture as to how the day has fared. There you go. It's been a bumpy ride when it comes to the broader end of spectrum, because now we're closing almost in that 1:1 ratio marks where advanced decline ratio is concerned. 1,200 odd advances versus that of 1,100 odd declines. Let's pull up the sectoral heat map as well quickly to see how sectors have fared during the day. Nifty Pharma tops the chart with 1.6% of gains, followed by Nifty Healthcare, Nifty IT. The three sectors leading the pack, but something that's been under pressure includes Nifty Defense down 0.6 odd percent, Nifty Energy down 0.4%, followed by Nifty Media, and Nifty PSU Bank also has seen some profit booking in trade today. Lastly, in terms of the broader markets, let's try to pull that up. The mid-cap 150 also closing at almost high point of the day. Yes, closing almost at its high point of the day, up 0.4%. The small-cap 250, however, did slip into the red, but back into the green territory now, closing around 0.08% higher. Lastly, let's try to pull up the BSE 500, because that will tell us a picture of the broader end of spectrum. And Poonawalla FinCorp still topping that chart, up 12%. Prism Johnson up 11.5%, followed by something like a Restaurant Brands, Tata Investment, Embassy developers as well. But something like Cohance has seen a downtick of around 6% in trade today. Hitachi Energy down 3.6%, DCM Shriram down 3.5%, and some names like Arkin Chem, CCL Products, Godfrey Phillips under pressure. So that brings us to the end of the show, but before that, let's take a quick look as to what you'll be watching out post market hours today in terms of what you should keep your eye out on in terms of where global factors are concerned. US initial jobless claims data will come out. Keep your eye out on that. In terms of corporate actions, all of these companies will be trading ex-dividend. So Ambika Cotton, Gujarat Alkalis, Hightech Gas, PG Electroplast, some other names like Nalco, Fact, Goldium, as well as Alphego will be trading ex-dividend. In terms of stock split, Tourism FinCorp of India will see a stock split tomorrow from a 10 rupee share to a 2 rupee share. In terms of IPO opening, we'll be seeing GK Energy opening its IPO tomorrow. It's a 464 crore IPO, a fresh issue of 400 crore from that, and a 64 crore of OFS opens 19th of September, that is tomorrow, and closes on 23rd of September. The price band is set between 145 to 153. The other one that's opening is Sattvic Green IPO. 900 crore IPO, of which 700 crores is fresh issue and 200 crores is offer for sale. Here, again, it opens on 19th of September and closes on 23rd of September. The price band is set between 442 to 465. But with that, we're completely out of time on this edition of India Market Close. Thank you so much for watching. Do stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
We're the only country with such a large population of youth and युवा.
प्योर टैलेंट और कुछ नहीं है.
बुलाने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का.
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने.
We need to work towards an egalitarian society, regardless of gender and orientation.
welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, benchmark indices edged higher, especially in the last leg of trade today. So the Nifty and the Sensex ended in the green for the third consecutive session as Fed cut rates by 25 basis points. The Nifty also settled trading above 25,400 levels, while the 30-pack Sensex exceeded 83,000 odd levels. So investor sentiment was also uplifted by GST reforms and progress made in India-US negotiations. Broader markets saw an upward momentum too, with both the small and mid-cap indices ended in the green. Eternal, HDFC Life and also Sun Pharma were among the top gainers in the Nifty, while Coal India, Bajaj Finance and Trent lagged behind the most. The advanced decline ratio ended skewed, with over 1,200 stocks ending higher. So the sectoral picture was mixed, with Nifty Pharma, IT and healthcare emerging among the highest sectoral gainers. Now let's look at some stocks that have been buzzing in trade today. First up, we have Poonawalla Fincorp. So Rising Sun Holdings, the promoter entity, has increased its stake in the company by purchasing 3.3 crore shares at 452.5 rupee per share, which is a price slightly higher than yesterday's closing price of 447 rupees. So this purchase, valued at 1,500 crore rupees, raises the promoter's total holding from 62.5% at the end of June 2025 to approximately 64%. So this move could be seen by investors as a strong show of confidence in the company's future prospects. Next up, we have Cohance Life. So a massive 34.2 million shares representing an 8.9% equity change in the company have changed hands in a single block. So the deal was valued at over 1,750 crore rupees. Jasmine Holdings, which held a 33.34% stake in the company as of June 2025, was the seller. The floor price for our transaction was set at 900 rupee per share. Next up, we have Biocon. So that was also buzzing in trade, as the US FDA has approved two of their biosimilars, Bosaya, which is a biosimilar for the osteoporosis drug Prolia, and also Ocalso, which is a biosimilar for cancer-related bone issue drug Xgeva. So, which is a key part of this approval is that provisional interchangeability granted by the FDA. Now, this means that these drugs can be easily substituted for their reference drugs, which could significantly increase their market penetration and also appeal to both the doctors and pharmacists. Next focus we have is on Cochin Shipyard. So it has sealed a major pact with oil and gas giant ONGC. So this agreement, valued at 200 crore rupees, is for dry dock and major layup repairs on one of ONGC's jackup rigs. So these specialized rigs are crucial for offshore oil exploration. The project, which is a major boost for Cochin Shipyard's repair segment, is scheduled for completion within the next 12 months. In a major move to deepen its presence in India's electronics manufacturing space, Dixon Technologies has announced a strategic acquisition. So the company has signed a share subscription and purchase agreement to acquire 51% stake in Kunshan Q-Tech Microelectronics. So this deal is valued at 553 crore rupees, and this acquisition is also a key part of Dixon's long-term vision, as it is expected to create significant synergies as well. Next stock that was buzzing in trade today is Bandhan Bank, which has sold a portion of its stake in Yes Bank. The bank also offloaded over 15 crore shares for a consideration of 331 crore rupees, reducing its holding from 0.7% to just over 0.2%. So this comes after Bandhan Bank was part of the consortium that bailed out Yes Bank in March 2020, where it had acquired shares at just 10 rupees per share. Next up, we have Glenmark Pharmaceuticals and Astria Therapeutics. So they've yielded positive initial trial data for their drug, which is being developed to treat atopic dermatitis. Now, the drug demonstrated a best-in-class profile with a half-life of up to 68 days, which is a significant finding that could potentially allow for dosing as infrequently as also once every 6 months. Now, this positive results validates Glenmark's innovation pipeline and also shows promise for a potentially less burdensome treatment option for patients with this chronic skin condition. Onto some brokerage notes now. So, global brokerage firm Citigroup has added Sun Pharma to its Pan-Asia focused list, which is reinforcing its bullish stance on the company. So, the firm has maintained its buy rating on the stock, which is an impressive target price of 2,180 rupees. Now, this positive outlook is driven by the forecast that Sun Pharma's revenues from its innovative segment could actually climb to a staggering $3.2 billion by FY30. Also, Citi's earnings per share, that is the EPS estimates for fiscal years 2027 and 2028 are 10% and 18% respectively ahead of the market consensus. MOIL, which is the country's largest manganese ore producer, has officially begun exporting the mineral after being designated a state trading enterprise by the government. So the company's first shipment, consisting of a lower grade manganese ore below 46%, has been successfully routed to Indonesia. Now, this is a significant development as India has a surplus of this specific grade of ore which has limited domestic demand. Now, in a positive development for RailTel Corporation, the company has secured a significant order from the Bihar Education Project Council for the procurement and installation of smart classrooms. Now, this specific order is valued at 106 crore rupees and is also expected to be completed by January 14 or 2026. Now, this is a part of a series of orders from the same educational body, which collectively amount to 713 crore rupees. Now, this new business adds to RailTel's already strong order book, which stood at 7,197 crore rupees at the end of Q1 of FY26. MK Global has initiated a buy rating on Minda Corporation, setting a target price of 600 rupees. So the brokerage firm is optimistic about the company's future, calling it a spark for structural outperformance. Now, this positive outlook is supported by a forecasted price to earnings ratio of 30 times on its September 2027 earnings per share. HSBC has maintained its reduced rating on Page Industries, cutting its target price to 41,040 rupees. So the firm's analysts see that the company as a weak fit for their portfolio, which is raising concerns over its new product line, JKY Groove, which they view as a step away from its traditional core products. So the report also highlights that the company's margins are close to their peak as raw material prices stabilize. Also, HSBC has cut its profit forecast for the company by 3%, citing weak demand. In a significant win for the construction sector, Capacit Infra Projects has bagged a major new order from developer Hubtown. Now, the contract valued at substantial 1,518 crore rupees is for the construction of ultra-luxury residential towers right here in Mumbai. Now, this new project is a considerable addition to the company's already robust order book, which stood at 11,000 crore rupees as of June 2025. Azad Engineering has launched a dedicated lean manufacturing facility at its new plant in Tunikibola, Ram Industrial Park, Hyderabad. So the site focuses on producing highly engineered rotating and also stationary airfoils. Now, it also handles critical components such as sub-assemblies and also assemblies for advanced gas, industrial and thermal power turbine engines. Now, this setup supports Siemens Energy's global needs in power generation and also key industries. Onto an exclusive story. So sources have told us that major payments applications like PhonePe and Cred have stopped supporting rent payments using credit cards. Now, the directive requires fresh Know Your Customer, that is the KYC verification for a landlord's bank account, which is reportedly an expensive and cumbersome process. So the industry is currently preparing to meet with the RBI to seek further clarity on the matter. the Federal Reserve gave investors a lot of, a lot to chew on Wednesday as the central bank lowered the benchmark lending rate by 0.25 percentage point and also indicated 2 more rate cuts could be made by the year's end. So the central bank had been holding firm on interest rates as inflation remained above the Federal Reserve's 2% target. Powell has expressed concern the tariffs put in place by the Trump administration could actually lead prices to surge. And as per our chief economic advisor, V. Anantha Nageswaran, India and the US are likely to resolve their tariff issues within the next 8 to 10 weeks. Speaking at an interactive session organized by the Bharat Chamber of Commerce in Kolkata, Nageswaran expressed optimism about the ongoing conversation between the two governments. Now, the US had imposed an additional 25% tariff on Indian products in August, taking the total levy to 50% due to India's purchases of Russian oil. Now, this move has affected India's exports to the US, which stood at $85 billion. Nageswaran's statement suggests that a solution to the tariff issues is on the horizon, which could actually boost India's exports and also the economy. Japanese banking giant SMBC has acquired a 20% stake in Yes Bank, making it the bank's largest shareholder. So the stake was purchased through a secondary stake sale, with SEBI selling 13.9%, SBI selling 13.19%, and also other Indian banks selling 6.81%. Despite the sale, SBI will retain over 10% stake in Yes Bank. And the deal worth 13,483 crore rupees marks the largest cross-border investment in the Indian banking sector. Now, Yes Bank's managing director and also the CEO, Prashant Kumar, welcomed SMBC as a major shareholder, citing benefits from their global expertise and also high governance standards. Huawei unveiled bold plans for its AI chips at the Shanghai Connect conference. So the firm aims to double computing power yearly with new Ascend models through 2028. Upcoming Atlas supernodes will also pack thousands of chips, claiming to outpace the rivals. Now, this ramp ups the rivalry with NVIDIA amid US sanctions and China's self-reliance drive. So Chinese authorities probe NVIDIA for monopoly issues and also halt its chip imports. Now, Huawei's push boosts the local semis, which rose 2% in trade. So as Trump meets Xi, experts say that it signals China's tech confidence as well. So Kunpeng servers and also high bandwidth memory round out the strategy. Toyota faces a major recall of 591,377 vehicles in the US. So the issue stems from faulty instrument panel software. At startup, it fails to display key info like speed, brake status, and also tire pressure warnings. So this raises crash risk, and also says this has been said by NHTSA. Affected models include Venza, Highlander, Lexus, Tacoma, and GR Corolla, announced on September 18, 2025. So the recall aims to fix the software glitch. No injuries reported yet, but drivers urged to watch for symptoms. Toyota must also notify owners soon. Now, this highlights the ongoing auto safety challenges amid tight regulations. California court approved Disney's $233 million settlement with 51,478 Disneyland employees. Now, 2019 lawsuit accused the company of dodging a local minimum wage law. Now, this law required $15 hourly pay starting 2019, now at $20.42. So the deal gives $179.6 million to workers, $17.5 million in penalties to the state, and also $35 million to the lawyers. So Judge William Cluster called it fair and reasonable. Disney says that it already pays most cast members over $22 an hour above the minimum. Now the ruling ends a long fight over living wages for resort staff. Star Health Insurance has achieved a significant milestone, settling over 2,800 crore rupee worth of claims in the last 5 years. So between FY21 to 25, the company has settled over 4.8 lakh claims, demonstrating its commitment to its customers. Now, with a market share of 31%, Star Health Insurance leads the retail health insurance space. The iconic Pierre Hotel in New York City may change hands in a massive $2 billion deal. Now, the Sultan of Brunei and Saudi businessman Issam Khashoggi are interested in buying the Manhattan property, now which has been managed by the Taj chain for nearly 2 decades. Now, if the deal goes through, Taj will exit the Pierre Hotel, leaving them with just one property in the US, the Taj Campton Place in San Francisco. Now, the Pierre Hotel has been a symbol of luxury and also elegance in New York City since 1930. So, Taj has managed the property since 2005. Arabica coffee prices plunged the most in 17 years. Speculative traders exit bullish bets after record highs earlier this week. Contracts for December delivery of the variety flavor favored by Starbucks fell as much as 9.1%. Now, this was the biggest intraday loss since 2008. Now on to some national news. So it's a big update for Mumbai commuters. From September 20th, monorail services will remain completely shut until further notice. Now this decision comes in the wake of recurring technical glitches and also rising safety concerns. During this period, MMRDA will carry out a large-scale modernization drive, including the installation of CBTC signaling, introduction of new Make in India rakes, retrofitting of old coaches and also station upgrades. So the authority says that after a few months of inconvenience, Mumbai will finally get a monorail that is faster, safer and also truly modern. Cloudburst hits Uttarakhand for the second time in 2 days. On the night of 17th of September, a cloudburst occurred in Nandnagar Ghat of Chamoli district. Now, 6 houses in Kuntri Langafali ward were buried under debris. 10 people are missing, while 2 have been rescued so far. Families of 4 passengers who died in the Air India Flight 171 crash have sued Boeing and Honeywell. So they have alleged that negligence and a faulty fuel cutoff switch caused the accident. The lawsuit filed in Delaware Superior Court now claims the switch design made it prone to accidental activation, cutting off the fuel supply to the engines. The crash, which occurred on June 12, killed 260 people, including 229 passengers and 12 crew members. Investigators have focused on the fuel switches, but the US Federal Aviation Administration has expressed doubts about their role in the crash. On to some more global news. So China has dropped its antitrust probe into Google as trade talks between Beijing and Washington intensify over TikTok and Nvidia. So the investigation, which was launched 6 months ago, focused on Google's dominance in the Chinese smartphone market, particularly with its Android operating system. So the decision to end the probe was made by China's State Administration for Market Regulation, and also it is seen as a significant development in the ongoing trade negotiations between China and the US. So this move could actually potentially ease the regulatory pressure on US technology companies operating in China. On to another update on China. The dragon country's rare earth product exports have surged to a 13-year high, driven by strong demand from the electric vehicle and high-tech sectors. So the country's exports of rare earth minerals rose 6% in 2024, with 55,431 metric tons of the 17 minerals used in products like electric vehicles and also consumer electronics being shipped out. So this increase in exports is significant, given China's dominance in the global rare earth market, accounting for nearly 90% of global refined output. Now, the surge in demand for rare earths is attributed to the rapid growth of new energy vehicles, wind power, and also other high-tech industries. Saudi Arabia and Pakistan signed a mutual defense pact in Riyadh on Wednesday. Prime Minister Shehbaz Sharif and Crown Prince Mohammed bin Salman seals the deal with Army Chief Asim Munir present. So the agreement treats aggression against one as an attack on both, boosting joint deterrence. It builds on decades of security ties amid regional tensions like the Gaza war and Israel's Qatar strike. Now, a Saudi official called it a natural step, not aimed at any foe, and also stressed that balancing relations with India. So the pact eyes stronger cooperation for peace with Pakistan's nuclear edge in play. Smriti Mandhana's dazzling 117 of 91 balls powered India to 292 in the second ODI in New Chandigarh. So Australia, chasing 293, crumbled to 190 in 41 overs, handing India a 102-run victory. Kranti Good's 3-28 shown, while Darcy Brown took 3-42 for Australia. Mandhana's 14 fours and 4 sixes dominated, though no other batter crossed 40. So Australia's reply faltered despite Annabelle Sutherland's 45 the series. Now 1-1 heads to a decider in Delhi. Both teams' top contenders gear up for the 50-over World Cup starting September 30th. So with that, viewers, it's a wrap on this edition of Market Express. But please stay tuned to NDTV Profit and don't go anywhere.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
We're the only country with such a large population of youth and yuva.
प्योर टैलेंट और कुछ नहीं है।
आने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का।
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने की।
We need to work towards an egalitarian society, regardless of gender and orientation.
The Nifty and Sensex end higher for the third consecutive day to settle at over a 2-month high. Sectoral indices closed mixed. IT index gained on the back of 25 basis point rate cut by the US Fed. Chief Economic Advisor Anantha Nageswaran says he's optimistic that the US will withdraw the 25% penal tariffs imposed on India after the 30th of November. He believes there will be a resolution on both reciprocal and penal tariff in the next 2 months. Now, Maruti Suzuki announces price cuts, steepest drop seen in entry-level cars such as Espresso and Alto K10, cuts prices of Swift by more than 80,000 rupees, while Baleno gets cheaper by 86,100 rupees. Payment apps like PhonePe and Cred turn off rent payments via credit cards following RBI's norms directing payment aggregators to conduct Know Your Customer processes on a landlord's bank account before allowing credit card payments to it. Apollo is here to stay for a very, very long time, says Vice Chair Neeraj Kanwar as he dismisses concerns over the Jersey jinx. He expects the company's sponsorship deal with the BCCI to enhance brand trust and visibility. US Federal Reserve cuts benchmark lending rates by 25 basis points for the first time in 2025. Chairman Jerome Powell calls the move a risk management cut as the US Central Bank projects more rate cuts of at least 50 basis points before 2025 ends. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. But first up, let's take a look at how the markets fared today. The Nifty and the Sensex ended strong for the third day in a row. After initial gains, the indices remained in the positive range on the back of 25 basis point rate cut by the US Federal Reserve. On the sectoral front, we saw indices ending mixed with Pharma, followed by IT as the top sectoral gainers. My colleague Varsha now joining in with a wrap of all of the market action.
Yes, benchmark ends higher for the third consecutive day. Nifty closes about 25,400 mark, which was led by Eternal and HDFC Life, and Sensex closed about 83,000 mark. When it comes to Nifty Midcap 150 ends slightly higher for the day, while it closes higher for 10th consecutive day, and Nifty Small Cap 250 ends flat for the day, which was led by TV18 Broadcast and Netweb Tech, while Small Cap 250 closed higher for the 5th consecutive day, and sectoral indices, if you see, end on mixed note. Nifty Pharma gains over 1.5% for the day, best performing sector for the day, while Biocon and Laurus Lab gains the most in Nifty Pharma. Nifty IT and Nifty Auto gain higher for the third consecutive session, and Nifty Financial Services again higher for the 11th consecutive session. Nifty Bank gains higher for the 10th consecutive session, and Nifty FMCG snaps 4-day losing streak. When it comes to Nifty Oil and Natural Gas, which gained for the 7th consecutive day, and Nifty Realty snaps a 6-day gaining streak. While lastly, if I want to talk about Nifty PSU Bank snaps 3-day gaining streak.
Thanks for that, Varsha. And earlier today, we even spoke with Vikash Kumar Jain, who believes that the thawing of the US-India relationship is beginning to provide relief for markets. He also shared his views on overall market performance. Let's listen in.
Some of the medium-term worries are still there, and most of those are stock market worries, expectations running ahead of themselves, continuing to see, valuations quite, haven't really come off. But there were several other worries which were, all compounding together. Those are now at least turning into relief, like you said, thawing of US-India relationships. Fed rate cuts, what it does is a very important thing. Hopefully, it just gets interest back into EM, and EM outflows possibly stall. If that stall, then the necessity of foreigners selling India comes down. At the same point of time, we could also get into, after this period of pause, after several rate cuts by RBI, again, more rate cuts coming maybe sometime in this quarter,
And let's actually take you back to what was said last night. US Fed Chair Jerome Powell characterized the cut in benchmark rate as a risk management cut. While speaking at the press conference, he added that risks to the labor market are different now and that they need to be taken into account in the policy. Let's listen in.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
Now, today, IT was the top sectoral gainer in trade, and a key driver for that was, of course, the Fed slashing interest rates for the first time this year. But how was this a key tailwind, and what is the quantum of these gains? Let me quickly go across to my colleague Jasmeet now to explain all of this. Jasmeet, over to you.
Well, right, yes, thank you for that. Positive for Indian IT. Well, this comes in after the US Fed cuts 25 basis points and moves it to 4 to 4.25. Well, why is this positive? Because the Fed further plans to have 2 more rate cuts in the following year. Given the increased rate cut, this will also increase spending power of the US companies, where they could also go and spend on the other AI-based tools and other discretionary spend. With this makes a positive sentiment for overall Indian IT firms, given that this might be a return for discretionary spend. If you look at the Indian IT, nearly 60% of the revenue comes from the US. So this move is big. Now, if you talk about the current picture, the IT moved in roughly 1% in trade today, with the top gainers being from L&T Tech and LTI Mindtree, with Coforge following back. If you look at the overall IT market on Y2D basis, it's nearly down 60% and it's been gaining since last 3 trading sessions. While Q2 is something to watch out how the company turns up for all the quarterly results.
Now, since June, the market has been quite volatile, with the Nifty up just a little over 2%. In such phases, it helps to see what company promoters are doing with their stakes. My colleague Somit now joining us with all of that data.
Yes, given the fact that there's market volatility, we are bringing you this data where what insiders that are promoters have done with their shares. They also buy from open market, they sell in open market. So we have compiled that data and brought you the top 5 companies where insiders, that is promoters, have been buying shares from the open market. Firstly, in the month of September so far, that is for the first 16 days of the month, Industars, around 487 crore shares, 487 crore value of shares has been bought by its promoter Bharti Airtel, which is nearly 0.5% of the market capitalization. In Jindal Stainless, 113 crore worth of shares, 0.2% of the equity. In Paisalo Digital, in the first 15 days of the month, the promoters have bought shares worth nearly 82 crore rupees, which is nearly 2.4% of the equity. In Vidal Corp and Tourism Finance, promoters have bought close to 56 to 66 crore worth of shares, which is nearly 1.7 to 2% of the equity in the first 16 days of the month. Now, on the flip side, Voltam Transformers, a big block deal happened. Promoters sold close to 600 crore worth of shares, that is nearly 8.1% of the equity. In Aditya Vision, in the open market, the promoter has sold close to 346 crore worth of equity shares, which is nearly 5.3% of the equity. In Dr. Lal Pathlab, Safari Industries and Sigachi Industries, promoters have sold shares anywhere between 27 to 133 crore, which is nearly 0.4 to 1.6% of the equity. Now, so far in this calendar year, that is 2025, that is in the first 8.5 months of the year, net insider purchases stood at close to 3,860 crore rupees. The top 5 of them, firstly JSPL, 997 crore worth of equity is what the promoter has bought, nearly 0.9% of the equity. Industar, 708 crore, 0.8% of the equity. In Jindal Stainless, 350 crore of equity is what the promoter has bought so far in 2025, 0.6% of the equity. In Tourism Finance Corp, the promoters and the directors have bought 161 crore rupees of equity, which is nearly 4.8% of the equity. And in Paisalo Digital, 126 crore is the total buy value, which is nearly 3.6% of the equity. On the flip side, if you look at it's Bajaj Finserv, where there was a big block deal that happened, promoters sold close to 5,500 crore worth of equity, around 1.7%. Authum Investment, 2,473 crore worth of shares were sold, 4.4% of the equity. In JB Chemical, 6.2% of the equity have been sold by the promoter so far. In Apollo Hospital, 1,479, and in ZF commercial vehicle, around 792 crore, which is nearly 3% of the equity. And so far in 2025, promoters have sold shares worth nearly 25,500 crore in open market.
Right, Sumit, thanks so much for that. And let's go on to some other news and good news at that coming in after GST 2.0. We're now seeing Maruti Suzuki as the latest auto giant that has slashed prices across several models after the GST rate cut. Entry-level cars like the Alto K10 and Espresso will now cost up to $1 lakh less. Even popular models such as Swift, Wagoner and Celerio see sharp reductions. For more on this, let's go across to my colleague Danish Anand for a detailed breakdown of the car prices.
Well, India's largest car maker in terms of market share, Maruti Suzuki has announced that all of its cars will now be offered at a discount ranging from 46,000 to 1.29 lakh rupees. And these new rates will be applicable from 22nd of September. Well, from 22nd of September, new GST rates, by that I mean a flat 18% GST on small cars and a flat 40% GST on large cars will be applicable. Well, a major discount is being given in entry-level cars of Maruti Suzuki, and that covers Espresso and Celerio. And as we go higher in Maruti's portfolio, this discount is kind of being reduced, but the company has said that while the reduced GST prices will lead on to a discount of 8.5%, but the company has gone over and above and they have given a huge discount ranging between 12 to 24%, which will be applicable on different cars and different types of models. The company has also made it clear that these rates will be applicable only till 31st of December, as the company will be rethinking of these rates after this calendar year ends. But all in all, if we see in a big news, Maruti Suzuki, which is the biggest car maker in the country, it has given a big relief to all the aspirational car buyers.
Absolutely, Danish. And Partho Banerjee, Senior Executive Officer at Maruti Suzuki, said that the GST rate cut has brought prices down by 8.5% and the company has gone even further with extra reductions. But now this is only for a limited time with a price review due at the year end. Let's listen in.
Due to the GST, when we reduce it from 29% to 18%, the net effect of GST is 8.5%. But as I'm sharing with you, we have gone for further special offer to our two-wheeler customers so that they can upgrade to a four-wheeler. And Wagoner price now starts at 4,98,900. Here also, the price reduction is to the tune of 14%. Just one point, that this is going to be a limited period offer. It's too early to comment on that because there is going to be a pent-up demand. As I think you all know, in the month of August, most of the customer held back their purchase decision. So they all are going to come to the market in the month of October. So we should not be too much reading into the sales in the next 2 to 3 months. But yes, as I have earlier also said, that in the next financial year, we feel that the market is going to bounce back to the earlier CAGR of 6 to 7%.
And some positive news coming in on the trade tariff front. CEA Anand Nageswaran pointed out that while the original 25% reciprocal tariff was expected, the additional 25% penal tariff may have been driven by geopolitical circumstances. But there's optimism too. He believes that by November 30th, the penal tariff could be rolled back. Let's listen into those comments coming in.
This is where I think all of us are worried about, and I will take some time to talk about the tariff here. Yes, not only the original reciprocal tariff of 25% plus the penal tariff of 25%, both were not anticipated. I still believe that geopolitical circumstances may have led to the second 25% tariff, but considering recent developments in the last couple of weeks and so on, I do believe, I have no particular basis to say so, I just my intuition that the penal tariff will not be there beyond now the 30th. I mean, it's not a statement of based on any concrete indicator or evidence. It's my hope that given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I would believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
And let's now go across to my colleague Pallavi Nahata to understand what this means for India's trade relations with the US. Pallavi, is 2 months a realistic timeline to reach a trade deal considering the back and forth that we have seen between both nations in the past?
Right, we just saw the chief economic advisor present his comments, and he did say that he does see some rollback of the penal tariffs that the US President Donald Trump had levied on India because of India's ties with Russia. Is 2 months a good enough time for some rollback on that front? Absolutely, Sanjana. Let's remember that we saw the imposition of these tariffs also to be extremely spontaneous and unexpected. Like even the chief economic advisor mentioned, we have seen already some positive developments on the trade front. In fact, just earlier this week on Tuesday, we did see a statement from the Indian government regarding some positive developments after the US trade delegation had met representatives from the Indian team in India, and now added to that, these comments from the CEA do indeed appear to bode well for India's negotiations with the US, and for all we know, we could definitely see some positive news over the coming days on that front.
Right, Pallavi, thanks so much for that. Everybody's waiting with bated breath for that positive news, especially after September 22nd. I think the next date everybody's going to watch out for is 30th of November. And moving on, Apollo Tyres has replaced Dream 11 as the official sponsor for the Men in Blue. My colleague Vikram Oza caught up with Neeraj Kanwar, Vice Chairman and MD Apollo Tyres. Let's go across and listen in to an excerpt of that conversation, and for more details on the impact that is being penciled in from this very landmark deal.
It's a landmark deal, no doubt, Mr. Kanwar. It puts your brand on the Team India jersey until 2027. But what is the big picture over here? Is this primarily about visibility? Is it about global expansion? What exactly is the strategy here?
Well, I think, today, as far as cricket in India is concerned, it's not just a game. It's really the heartbeat of our nation. And it sits at the core of the nation's pride. I think being an Indian company, it gives us great honor to be on the jersey of the Indian cricket team. It brings in a lot of consumer trust as far as Apollo is concerned. Apollo is also known for being an Indian institution since 1976. We are clearly the leaders in the Indian market. Yes, it does create visibility across not only India, but the globe. But we are very happy because this is our national pride, the Indian cricket jersey. And for us, Apollo is also our national pride. So there's a clear synergy between the Apollo brand and the Indian cricket jersey brand. So that was really the motive behind tying up with BCCI for this really landmark deal that we have done.
So I see this, Mr. Kanwar. This is about, as far as your product is concerned, it stands for reliability, there is safety, there is performance. All these values sound a lot like what Team India stands for today. But now the question is, how do you leverage it? It's an important deal. It's an expensive deal as well. Now, how do you use it to your advantage? That's the question.
Well, I think that's a very good point that you're saying. I think the number one thing is going to be the consumer trust that's going to come in because of the quality of our products, which will obviously give boost to our sales and our network expansion in India. As you know, today we are the leaders. So we have to really play out this properly. We've not even had time to think how we're going to pan this out. But yes, obviously we are now looking at mega plans on communication, on how to roll this out into the country positively and take it to our advantage so that we do get benefits as far as the brand is concerned and as far as our bottom line is concerned.
But I'm sorry to have to bring this up, Mr. Kanwar, because we've seen other brands like Sahara and Oppo and Bear Joes, even Dream 11, all those brands that have been on the India jersey. they have struggled after grabbing that high visibility space. How are you looking at this so-called Jersey jinx, if we can call it that, because all those companies stopped sponsoring the jersey after coming under a cloud?
Well, Vikram, I was cautioned about this before I got into the deal, but I have a lot of faith in our company. It's been built by my father, Mr. Kanwar, who's the chairman of the company. We've had a very strong Apollo family in the organization. We employ 19,000 people. I have a lot of trust and faith in them. I have a lot of trust in the Apollo brand itself. And we are here to stay. We are a long-term company. We are leaders in our industry. And we have built an institution in India, which has really taken us to the global platform.
Unfazed by what they call the Jersey jinx. Moving on, India has taken a bold leap into digital insurance. The erudite chairman Ajay Seth has launched the Bima Sugam portal. Now, this is a one-stop platform set to transform policy access, claims and transparency for customers. Let's get my colleague Pallavi for more details. Pallavi, give us all of the details and what is this platform actually aimed to do and how does it simplify things?
To summarize, industry experts have been, sort of touting the Bima Sugam to do for the insurance industry, what we have seen UPI do for digital payments. So far, of course, that is something that's still some time away. For now, we have seen a launch of the Bima Sugam portal by Ajay Seth, the chairman of the IRDAI. And Seth too, in fact, emphasized on the fact that this is a stepping stone towards creating India's digital public infrastructure for insurance. He, like many others, believes that the move will help empower insurance holders, deepen penetration and ensure transparency and fairness. To sum up, what the Bima Sugam essentially, eventually, over time, should be able to do is that it should ultimately serve as a unified portal of sorts, a unified insurance marketplace, a digital policy repository, an eKYC and consent utility, and also a portal where policyholders will be able to settle their claims real time. So far, of course, we have seen the launch of the portal. It does not currently offer these features, but over time it is expected that these features will soon be rolled out, which will mean that it will be a one-stop solution of sorts for any and every requirement catering to insurance for policyholders.
Pallavi, thanks so much for that, and remains to be seen the use of this platform. Let's move on to another update coming in, this time with regard to payment apps. Major apps like PhonePe and Cred now have stopped supporting rent payments using credit cards. Sources are telling NDTV Profit that credit card payments have been switched off for now and following the regulator's recent master directions. Vishwanath now joining in with exclusive details.
So payment applications like your Cred, PhonePe or even Paytm will no longer support credit card payments for rent. This is happening because earlier this week on Monday, the Reserve Bank of India came out with master directions for payment aggregators, which requires these payment aggregators to conduct a thorough KYC or a know your customer process for these landlords who were earlier receiving rent payments using credit cards. Remember that this was a highly lucrative business for the card companies, for the payment application providers, as well as the customers, both the landlord as well as the tenant. It ensured that there was an easy free lookup period in the credit card transaction. It also allowed these payment applications to levy certain charges on these transactions. Banks themselves, who were the card issuers, were also levying higher cost for such transactions to go through. Essentially, what these payment aggregators believe is that if the regulations are being deployed in a very strict manner, then that would mean that their payment aggregator license will be at stake, and that is why they are switching off the business for now. What's also telling NDTV Profit is that in a few days, there is likely a meeting that the Reserve Bank of India is going to conduct with these payment applications to seek feedback on these master directions. Depending on what comes out of that meeting, they will decide the future course of this specific type of transaction where credit cards are used to pay rent. This has been something that the RBI has actually been against. It doesn't like the fact that credit cards are used for specific small value transactions, but also for retail transactions which are not necessarily commerce related. Rent payments, they've actually been coming up against it with the Reserve Bank of India seeking further details from payment aggregators and multiple meetings having happened in this space.
Thanks for that, Vishwanath. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
We're the only country with such a large population of youth and yuva.
Pure talent और कुछ नहीं है.
बुलाने वाला फ्यूचर काफी अच्छा है स्पोर्ट्स का.
Luck, patience and a lot of tolerance.
Life can change overnight.
जीवन में मैंने कोशिश की है सदैव चुनौती को अपनाने.
We need to work towards an egalitarian society, regardless of gender and orientation.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome to NDTV Profit. A very good morning to all the viewers you're watching. Know your company, that is KYC. I'm Hiral Dadia. what is on our radar today. We have Orient Technologies. Yes, a small cap company, but lots to know about this one, taking into consideration the kind of recent moves the company has made. Now let's understand. Firstly, the impact of high receivables on cash flows, is that a concern right now for them? Moving on, the second aspect that we're going to consider over here is taking the order book into consideration, which stands at around 414 odd crores or little more. Does that mean the FY26 revenue will remain the same? And the potential revenue that the company is looking to see from the security ops center segment from a business side. Moving on, if you have to look at this, security operations center, how quickly can this business clock a 20% margin? Because that's the guidance that the street is working with. And from a 3-year view, what does the top line, margin and recurring revenue tell you from here on if you have to look at Orient Technologies from a growth perspective? What is the kind of export opportunity that Orient Technologies is actually sitting on as well? And if you have to look at the third quarter, what are the factors that will lead to the margin expansion that could come in Q3? These are a few of the questions that we are talking about with regards to where Know Your Company goes and on our Orient Technologies. But let's shift focus to tell you more about the company as well. Firstly, it's an Indian IT company who's into transformation and an infrastructure partner as well. It offers multiple facets like IT, cloud, artificial intelligence, security and digital services, and they mainly focus on recurring as well as annuity services. So it is not a one-time sale. So stickiness with regards to clients becomes absolutely important when you talk about Orient Technologies. They are headquartered in Mumbai. The employee count is around 1,600 employees, and they have a pan-India presence as well. If you talk about their product and solutions, you're talking about IT infrastructure, which comprises of data centers. That is one of the hot topics, and that's one of the reasons as well why we've called the company right now, because one of the brokerage reports did note that there is a 5 times growth that could be expected over there. Servers, end users, devices, as well as networks is what they deal with in terms of IT infrastructure. When you talk about device as a service, which is DaaS, they do give out devices on monthly rentals as well. In terms of cloud and DevOps, they look at management, optimization across AWS and Azure. So this is, Amazon AWS. Moving on, cybersecurity, they're talking about endpoint security, managed, security operation centers and threat monitoring as well. In terms of managed services, you're talking about, remote facility management as well as infra managed services as well. And in terms of digital transformation, analytics, artificial intelligence, automation, custom apps comes at play. The new aspects that we're looking at is GPU and AI hosting, which is partnered with AWS for India AI Mission. So this is what they're looking at. But let's quickly look at the segmental revenue mix as well for the company. Around 60% of the revenues come in from IT infrastructure services versus 40% that comes in from app and IT infra as well. So that's in terms of your FY25 breakup. And your cloud and data, that is actually growing faster. If you look at the next one in terms of the segment, it's a 30% plus compounded growth that you're looking at. ITES, a very stable business that they have on that front. Order book, crucial for visibility for them because their total order book is at around 414 odd crores right now. And they've said that this will be built over FY26. So that's the key question, that is this what is going to translate into revenues in terms of FY26 as well for the company. And multi-year service contracts is what they look at for public sector, enterprises, and BFSI, cloud and DaaS. So that's everything that you need to know about the company. But let's quickly look at all your rating parameters from here on. From your income statement check to balance sheet, cash flow, return ratios. You're talking also with regards to shareholding patterns, street credentials, street coverage, and the valuation picture and outlook. These are the ones that we will be considering with regards to where Orient Technologies is concerned. But let's dissect the first one. Income statement. Let's pull up that one on the screens and you'll see what's happening with the income statement from a revenue. A 22% compounded growth is what you've seen from a 3-year perspective. And the margins, in fact, have declined. So that is going to be crucial. The profit number has seen a compounded growth of around 15% and EBIT is around 12%. So your EBIT and profitability, the growth is slightly lower as compared to your top line, and hence we've given it a sideways, that is a neutral rating with regards to where income statement goes. Moving on, if you have to look at the same one in terms of the Q1 FY26 performance as well, if we can get that one, because that will give you the sequential and the year-on-year growth. Revenues have seen a decline sequentially, EBIT has gone down, margins have declined, and your profit number has also declined. But year-on-year, a marginal growth that has come in on that front. And if you have to talk about the margin trajectory for the company, from a 9.4% that they were in FY22, it's been declining, and it's come down to 6.2% in the first quarter of FY26, and that is something which is absolutely concerning. So yes, a sideways, that is a neutral rating. In terms of the balance sheet check, let's quickly look at the equity and the cash and bank. If you see in terms of the equity, a strong growth that is coming in from 18 crores to 42 crores over a period of 3 years. The cash has been increasing as well substantially from a two-digit number of 20 odd crores in FY23. A similar number in terms of FY24, it's actually grown 5 to 6 times to 116 odd crores. So that is one of the key positives. The borrowings have gone down substantially as well. And if you talk about the other equity, that has nearly tripled in 3 years. So hence a thumbs up, because the balance sheet is looking absolutely strong when it comes to Orient Technologies as well. Talking about the cash flow matrix from here on. Now, what is happening over here is, if you see the cash flow, let's quickly look at the operating cash flow. It's actually gone into negative, on the back of which, if you see the profitability, when they've put it, added a 50 crores in FY25, the cash flow from operations to profit, that is a negative number. That's a negative 22%. The net cash flows have actually come in at 95 odd crores. And it's a very no trend line kind of a picture when it comes to cash flows. There is no stability, there is no sustainability, it seems. And that's the reason why a thumbs down coming in with regards to cash flows go. Because one, your operating cash flows is getting into a negative number, into a loss, which is a concerning area when you talk about this matrix, and hence a thumbs down. Let's quickly look at the return ratios as well. Now, return ratios become absolutely important from an investor perspective. And there you go. They actually started at a high of 55. You're looking at 27% now. So there is that stability which probably will start emerging from here on, is what the street is anticipating, and hence a thumbs up, because in terms of your return to capital employed, I mean, a 45 to 41% kind of a number, not very sustainable. But from here on, there could be some bit of sustenance that could be coming in as well. Let's quickly look at the shareholding pattern now. If you talk about promoters, they've remained absolutely stable in terms of their stake. FIs, in fact, have actually gone ahead and reduced stake in the company. DIIs have been absolutely absent. The public free float has increased from 21% to 26%. So there is some bit of retail participation that has gone up with regards to where Orient Technologies go, and that's the reason why a thumbs up giving in there. But the promoters have remained absolutely stable. There is no institutional investor which is putting their bets on Orient Technologies. But because the retail participation is high, we've given it a thumbs up, not considering the FIs and DIIs currently on this one. Moving on. The next parameter that we're looking at is the shareholding we already looked at, the street credentials from here on. Again, sideways, that's a neutral rating, because if you have to look at since listing, which is in August 24 to now, the returns have varied in that range of almost 7% to 27%. So since listing, no major gains coming in for someone who looked at the stock or entered the company at the IPO time. The returns actually started coming in only on a YTD basis, where it's actually grown 27%. So, a neutral rating there, not a loss to the investors, still making a profit in terms of their investments on the stock. So hence a neutral rating there. And when you talk about valuations, now the most expensive, or maybe the second most expensive, if you have to look at peers, from Orient Technologies, Dynacons and Allied Digital, these three are the competitors. The least expensive right now, the cheaper one is Dynacons, which is around 17.4 times. But the most expensive is Allied Digital, which is at 35.5 times. Orient Technologies fits in somewhere in between at 27.5 times the current PE. So in terms of the current price to earnings, we've given it a neutral rating because it's on number 2 out of the 3. And very lastly, the outlook seems to be also very neutral right now, because the aspiration of the company is to be in the top 5 system integrators from here on. Whether they will be able to make it to that list or not is the question we need to check. Their focus is mainly on recurring revenue and cybersecurity. So the stickiness with regards to clients becomes absolutely important. If they are not able to get that stickiness, then the business could go sideways as well. And the total order book currently is around 414 odd crores, and the Q1 order intake was under 105 odd crores. They've also mentioned that probably the margins could remain under pressure in the second quarter. And as we know, the margins over the last couple of years have been on a declining trend. So that has been a concerning area as well for Orient Technologies. And the reason why we are seeing that lag in terms of margins is because the investment that they're making in employees, they've built a base of almost 1,600 odd employees so far. And this is coming in at a time where you're seeing layoffs happening in the IT industry. Secondly, they're building out the security operations centers as well. So that is what is putting pressure on the margins. And the revenues from this business are yet to come in. So till the time the revenues don't come in, the pressure in terms of margins is expected to continue as well. And the anticipation is over 20% margin with regards to the security operations center business. And that is a tall ask right now. How achievable is that going to be? How sustainable that is going to be? And how fast that is going to come in is what we need to see. Very lastly, the device as a service is also a core, and that is an innovative offering that the company has. And in terms of their midterm roadmap, that actually includes expanding services beyond India. So they're looking to, look at other countries as well. So that export part of the business becomes important as well. And very lastly, that targeting APAC and Middle Eastern markets, and the timeline that they've given for these two markets is 3 years. So within 3 years, what will their export opportunity look like? How much will that contribute to their top line? How much will it aid margins? And profitability is the key from here on. Let's quickly look at all the ratings now. From the first 4, you have balance sheet and return ratios, which are a thumbs up. Income statement is neutral and cash flow is a negative. So that's a down one coming in there. If you look at the other set of ratings, again, 3 sideways, which is 3 neutral. Street cred, valuations and outlook is pretty neutral right now because they yet have to perform to get there. And your shareholding is a thumbs up only because your promoters have remained steady and the retail participation has increased. Overall, a 5 on 8 rating is what we've given to Orient Technologies, which is still on the higher side. But what from here on? Joining us on the show to discuss more, we have Mr. Ajay Sawant, Chairman and Managing Director at Orient Technologies. Ajay, welcome to the show and a pleasure to speak to you at NDTV Profit. My first question coming to you is, since listing to now, a lot of metrics where we've seen ups and downs that have come in. My first question is in terms of FY26.